All right. Hello, everybody. Welcome back to another episode of the Market Close. And, well, what a close it is. We are back. We are ending out the trading week. And, well, it's a fun one. It is a fun one. Palantir, 123.49. We got to 124 at some point on the day, 124.42 on the day. Right now at 123.56, down about 6.3%. Robin Hoodie up about 3.6%, 48.33. You got Google at 165, Meta at 596, Nvidia at 114.21. At one point got to 115.4, and then you have the S&P 500 at 566.84, up about 1.5% on the day. This has been one of the most exciting days this year, and primarily the reason it's exciting is because of what I'm about to show right now, which is we have recovered entirely. In fact, we've more than recovered from where we were on Liberation Day. So if you look from April 2nd to May 2nd, this was that nasty volatility that we all experienced. And for the most part, retail ended up buying the dip. March was inflows of $40 billion. And then April, we saw today in the data, was inflows of another $40 billion in terms of retail. We also have some new hedge fund data that I'll talk about in a second. And we are right back. So all of this, whatever it was for, whether it was for China, trade deals, tariffs, whatever it was for, I think none of us still know why we went through everything we went through. Maybe we'll get some deals and we'll have some more clarity on that. But the point is, if you stayed in the markets, you bought the dip, you have done very well, and you've gained some momentum. Now, some stocks obviously have outperformed others, like a Palantir, right? Palantir is up almost 80% from the lows. You got some other names that continue to go lower. You got some other names that have been flat, but relatively the entire market has started to move up and to the right. And maybe, just maybe, that 4,800 on the S&P was the bottom and the worst has been priced in. That doesn't mean we're going back to 6,200 anytime soon, but that does mean I think we don't have to go back down to 4,800 if the worst has been done. Also, HIMS, incredible day on HIMS. Look at that, 40.18, basically where I sold it at $40.50 or $40.05, up 11% on the day. That one's probably squeezing, I would imagine. You got a bull market, S&P going up, and you got a stock that's 30% short. That can cause a squeeze. Microsoft up 2% on the day. Grab, an okay day, up 2.4%, nothing too crazy. Robinhood as well, hit 50, wasn't able to really maintain it. But then Palantir, incredible day, 123.54. I was taking a walk outside near a lake when we hit 124. I posted the picture on Twitter, and I had no one to tell. So I went up to some geese that were walking around. I tried telling them that they didn't really care too much. So unfortunately, I have a video on my YouTube channel, on a YouTube short, when Palantir first hit 20, and I went up to the geese and I was like, hey, do you know Palantir's 20? But yeah, at 124, $100 later, they didn't care too much. So there you go. Now, a couple of things. I think to add some nuance to some of the euphoria that we're experiencing right now. Number one is, if you want to hedge your position or your portfolio, I'm not the best at hedging, which is why at the worst of it, I was down about 30% year to date. By the way, we can all post our year to dates right here. I posted this on Twitter. A lot of people in the comments are pretty green. My year to date right now is 5.3%. The S&P 500 is down 4%. At the worst of it, it was negative 30%. And I'm not that good at hedging. Obviously, I need to learn more about the nature of what it means to hedge. But I feel like if there was a time to hedge, you know, this is a new market where, hey, although the worst of it might be behind us, cheap puts are cheap, right? If you want to buy some puts to hedge, covered calls, juicy premiums, because everything's up. So people are willing to pay the call premium. So if there's certain strategies that you've learned over the past couple of weeks in terms of volatility, I'm still learning that stuff, and I will try to spread all my education as I continue to learn the concept of hedging. Then maybe now is a good time to deploy it, right? If you got a massive Palantir position, maybe going into earnings, you buy some puts just in case for protection. If the puts go to zero, whatever, your stock goes up. So I think in the euphoria, it is important to recognize that taking profits is not horrible. Hedging is not horrible. Buying some puts, selling some covered calls, that's not horrible either. But it feels pretty damn good. It feels pretty damn good to be back and be a little green. We got Davis up 25%, Sergio's up 30%, John's up 4%, Mega's up 16%. A lot of you guys up about, really from that 7 to 20% range is what I'm seeing right here. Austin's up 9%, Jurgen 32%. Some of you guys that are still red, the people that commented that were still red under this post, very barely red, negative 2%, negative 3%. So some stocks still been hit a little aggressively, but I would imagine they're coming back, hopefully, if we continue to get momentum. Realistically, what we really need, I think Palantir might make a run for 24 or 124 again, 123.83 right here, is a confirmation of a deal. On Monday, we wake up to Japan signed a deal, India signed it, like we really get something good. And maybe that's where the market's running. Maybe the market's front running that action. But if that does happen, that could help us sustain this momentum and prove to the market that even though the economy is slowing down, although that non-farm payrolls number was phenomenal this morning, and that's what really created momentum as well, that Jay Powell will be able to cut rates and that we will be able to walk back tariffs, which will also allow Jay Powell to want to cut rates as well, which is very important. Now, one key thing on hedge funds. So take a look at some of this hedge fund data. This is from a research firm called Unlimited, and they track real-time data from 3,000 global hedge funds that manage $5 trillion in assets. And they are saying that short positions on U.S. equities have jumped to the highest level since the 2022 bear market. Since 2000, there have only been a few other times where hedge funds held such a high short exposure. That was 2020 and 2008. And it looks like as of now in 2025, you can see right there on the chart, it is very similar to the levels it's at. Not exactly as high as 2022 in terms of overall exposure from a short perspective, but it's getting there similar to 2022. Either these hedge funds are going to be right and, we're going to be wrong for buying the dip, or retail got it right. And maybe these hedge funds are going to have to start covering really soon. And an India deal could really help us on Monday to get these hedge funds to cover. And that will create even more momentum in the broader equity markets, because now you got big money coming in to end up buying everything that they sold about 4 weeks ago. So really excited to kind of see this momentum. Amid, just a question, are you still buying Palantir or holding? I am just holding. The last time I bought Palantir was actually at 103. I bought it on last earnings, kind of just for fun to buy it in the hundreds. Last other buy was before that, it was at 62. That was not a small, that was a small amount, nothing too crazy. Realistically, the last time was really at 25. So, it's been a while, and I might buy some shares on fun on Monday just for fun, it's whatever. But in terms of serious buying, no. And if anyone wants to sell, I know that's the big question here. Should I sell? Like, again, I talked about it in the morning. You got to do what you're comfortable with. If you want to hold it into earnings, hold it into earnings. If you don't, take some profits. If you want to hedge, get some covered call. Like, there's a lot of ways to play it, but I don't think it should be keeping you up at night. If I say this with like, I hope people believe me when I say, if Palantir falls to 60, the most amount of pain I'm going to experience in my life is people on Twitter sending messages that, oh, look, Palantir is down. That's the most amount of pain. The actual equity position I have is not going to cause me any pain. I'm not going to lose any sleep. I'm not going to worry about the company. The most amount of pain will be everyone saying, see, I told you, Palantir. Yeah, and I can deal with that. So if you actually will feel monetary pain, like you will feel bad that you go from 120 to 60, then you got to do what you got to do. But if it gets there, I'm just like, I'm in this for the long haul, and I will continue to buy the dip and just really not care that much. So it's just conviction, right? Like, conviction's hard to, a lot of you guys have this within. I sold HIMS at 40 after I bought it at 28. I was like, fuck this, I'm out, right? A lot of you guys, doubled down after it fell 17% the day after that, and you're being rewarded. So it's just a question of conviction and how much you have. And if you want to enjoy the ride or take some profits along the way on the ride. And I think either is okay. Here's an update on fentanyl and China. This is another reason markets are pumping a little bit. China seems to be easing up in regards to tariffs and this trade war.
Be something of a breakthrough when it comes to China. So the Journal reported around midday, around noon today, that a top Chinese security official has been looking into what exactly the Trump administration wants to see when it comes to fentanyl. Remember, of the 145% tariffs that Trump has imposed against China so far this term, 20% of those are about fentanyl specifically. So the Journal emphasizes that discussions are fluid here, but that they're considering sending the security official either to Washington for meetings or to some third country to have meetings with the Trump administration. Now, I should note here that I've reached out to the White House. We have not heard from them about whether they've heard from China on this front, or whether this sort of move would be enough for them to adjust their tariffs at all. But this does come just after China's Commerce Ministry said that they've been evaluating some of the U.S.'s offers to launch trade talks. And they said yesterday that they want to see some signs of sincerity from the U.S. as well in the form of canceling some of these tariffs. So the key with this Journal report here, Scott, is that it could be the type of move that allows both sides to sort of call a win. The U.S., President Trump could say that he got a win if China makes some big move on fentanyl, and that could theoretically lead him to at least reduce the fentanyl tariffs, which could allow China to say, we're only talking to you now because some of these tariffs are off the table.
This is all egos, bro. This is all egos going back and forth, needing to feel validated. It is quite spectacular that this is how it's playing out. But regardless, it's good. We're getting some progress. We're getting the adults to come into a room together and talk about what they're going to do. And that is probably a reason why the market's pumping right now, because we are getting closer, hopefully, to a deal. It's just going to be a question of when that ends up playing out. Palantir, we just hit 124, 124.18, got rejected right there. Now we're right back to 123.98 at 124. We got 5 minutes until the market closes. Let's see if we close at 124. Remember, earnings are after the bell on Friday. So, we're still going to have to, on Monday. So we're going to still have to deal with what happens on Monday before we get into earnings. But it looks like we're definitely going to get above a 123 close. Steve will be on at around 4:15, 4:20. So in about 20 minutes, he'll be on. And, we'll get his take on Palantir and see what he has to say. Very exciting market, dude. Very exciting market. If you're wondering why this is happening, I think non-farm payrolls and the closing in on trade deals is what's getting the market excited. Now, unfortunately, if we don't get the trade deal soon and if we keep getting some other types of crappy macro data, this can reverse very easily, in my opinion. I don't really have a lot of faith that this is just like we're out of the woods completely, but we have a chance to be out of the woods is what the market seems like it's doing right here. I definitely think some people are selling into the strength, and that's fair. But there is also an argument that those who bought the dip are getting rewarded right here. And if people thought they missed the dip, then they might start to allocate capital here to pile into that momentum. And they might be chasing as well. And that chasing is leading to some of these equities go a lot higher. By the way, we do have some breaking news. Nike has asked President Trump for tariff exemptions. And along with Nike, you also had Adidas. So Nike, Adidas, Nike, Adidas, there's a couple others, but Nike and Adidas are the two on the headlines that have asked Trump for tariff exemptions, according to CNBC. Again, I think more of these companies, just like Stellantis and Ford and GM, are going to go up to Trump and say, hey, bro, we're not going to survive. We're going to have to lay off people unless you give us a break. And I think Trump's going to have to, manufacture his argument whatever way he does. For the auto manufacturers, he's like, well, I wanted to give them a little bit of a break, yada, yada. He might have to do the same for the retailers. Otherwise, either we're going to have higher prices or more layoffs. And regardless, the market just cares that the tariffs are rolled back. That's it. And if we do that, then I think that can help get equities to go higher. Palantir right here, 124.15, 3 minutes until the close. 3 minutes until the close to see how we end out on the day. How is everyone feeling, bro? How is everyone feeling? I mean, this was one of those days, right? Where after the market open, you go, you take a walk. You just do like smiling all day. We've had a lot of crappy days in April. We're starting off May pretty nicely. And I think we all got humbled in April. We all know that this could go away just as quick as it came, but still feels nice. It feels a little nice to get this type of momentum. And quite frankly, it's 9 days in a row. We're about to end green in the next 2 minutes. It's 9 days in a row on the S&P 500. Unfortunately, Amazon couldn't find a way to do its thing. But that one's still there. Okay, on Snapchat. So I sold Snapchat. So what I did is I DCA'd into Snapchat, got my average down to 838, and then I sold at 843. So I'm out of Snapchat with a win. It's like a $90 win. But yeah, it went down. I bought more, DCA'd, got it to be just under like 2 cents, and then I sold it. So Snapchat was never something I wanted to go long on. I thought it would pump to like 11. I was wrong about that on earnings. So got out with a $90 win. But we're done with Snapchat. And now we can go back to not caring about this company anymore. So that's it. I'm sure people have done that before, right? They get in, you got in at 870, stock falls, like, all right, let me just buy a bunch, get the average down, and then wait till it ticks up a little bit, and then I'll get the hell out of it so I can get profitable. That's what I did. So I don't know if that's any level of advanced day trading or whatever, but that's just what I did. And so now we can allocate that capital somewhere else. Maybe we'll buy some Palantir for the hell of it on Monday and see how it goes. But that's what we did with Snapchat. All right, here we go. Markets are going to be closing very soon. We are getting into that 4 p.m. range. 30 seconds left. Palantir, are we going to get the 124? We're going to get the 124, folks. It looks like we're going to get the 124. It looks like it's going to happen. All-time high is 125, not 124. So we might have maybe after hours, maybe on Monday, but this is incredible, dude. 8% up or 6% up on the day, 7% basically, 124.30. I mean, we started the day at 118. So it's been quite the journey. All right, here we go. Friday, May 2nd, 4 p.m. Thank you, everybody, for being here. The stock market has recovered from Liberation Day and is now closed. All right, we are done for the week. We are done for the week. 124.18. on Palantir. Oh, by the way, I forgot to show you guys this because this got posted after the market opened. I'm going to put this link in the chat. Barron's did a profile on me. So they did a profile on Palantir, and they used me as like the person in the article who they were getting all the quotes from. The title is Palantir stock price doesn't make any sense. Devotees don't care, and they might have a case. So I'm going to put this in the chat, and anyone can read it. I don't have a Barron's subscription. I kind of read a little bit of it, but I mean, if you read Barron's, then feel free to read it. And if you don't want to read it, that's also fine as well. But I'm just going to put this right here. It is a good piece from a couple of paragraphs that I read, and it's not really an argument around Palantir's valuation, or it's more so a question of the Palantir. Actually, Lisa Gordon, the head of PR, recommended the guy who did the piece on me. His name is Aaron. And basically, it was a pretty normal thing. He was just saying, hey, a lot of people don't understand how Palantir is trading the way it is. This whole retail community, can you explain it to me? And so I spent about 30 minutes with him 2 weeks ago, and I talked him through the entire journey, how we even got here, and he was able to use that for his piece. So we talked about the valuation, the journey, retail support, all that, and more in terms of what it means for Palantir. Palantir right here, 124.23, up 6.91% of the day. Robinhood, 48.66, that's up 4.3%. Tesla, by the way, Tesla was almost at 297, dude. Tesla was at freaking, I mean, basically almost 300. What was the high on Tesla? Tesla was 294.78. It's not 297, 294. Tesla now 287, but Tesla just defying reality with this momentum after earnings. SoFi, 1268, that was up about 1.36% on the day. Meta, 597, up 4%. NVIDIA, 114.49, that's up 2.58%. Microsoft, 435. Grab, 47, that's up 2%. Let's go to the semis. How did the semis do? Semis, NVIDIA again was up. AMD, 2%. Micron, up 4%. Lam Research, up 4%. Dell, up 3%. Semis had a great day. TSM, up 3.8. Intel, up 3.2. And then SMCI right here, up about 3% on the day. Pretty damn incredible. MicroStrategy and Bitcoin. So first of all, Bitcoin was 96,898. So just below 97. And then MicroStrategy right here, 395. That one was also up 3.59%. And then HIMS, of course, incredible day on HIMS. Look at that, $40 close, 40.70, up 12.5%. One of the things about HIMS I was talking about in the morning is that I might get in at a higher price than I got in before just for the covered call premiums. I mean, these premiums are just insanity. And I, based on what I'm looking at the numbers, I don't think 40 is ridiculous. It's definitely not as cheap as 28, but it's not some crazy price. So I'll let you guys know if I get back in there, but the covered call premiums seem pretty exceptional on HIMS. Tesla right here, 287. Amazon was negative for the day. Still have my Amazon. Didn't really do anything with it. 190 right here. And then Apple, on one of the biggest green days we've had in the past 9 days, Amazon red or flat. Apple could not find a way to hold up, down 3.73% on the day. Pretty damn incredible for Apple. The market basically saying we do not like what we're seeing from Apple if the entire market goes blistering green, and Apple wasn't able to keep up with it. In terms of the earnings we had yesterday, so Reddit ended up down 4% on the day. Roku down 8%. Big Bear AI was flat on the day. Duolingo was up 21%. Wow, I didn't see that. Duolingo, great. Airbnb, flat. Block, unfortunately, down 20%. That was just ugly. Twilio was up about 2%. Instacart up 13%. MicroStrategy up 3%. Atlassian down 8%. Riot was up 8%. GoDaddy down 8%. Lumen about 8% down. And then NVIDIA again, 114.47 on the day. So not too bad. Dragos, you didn't have to do that, brother, but I appreciate it. Thank you, Dragos, for the 50 gifted memberships. A bunch of you guys just got some memberships from Mr. Dragos. Dragos bought Palantir when it was $15 early on. And he has loved this journey for a long time. Dragos, I got to come to Chicago so you can teach me how to eat your deep dish pasta that you guys, for some reason, defend as pizza. But I got to get there soon. Yeah, all of you guys, 50 of you guys got some memberships right here. So thank you, Dragos. Thank you for that. Let me see. Can I pull this up? Let me put this right here. Okay, cool. Yeah, I have it right here. I have the membership. Okay, cool. We can see it right here. Awesome stuff. XYZ. Yeah, again, it was Steve. We'll talk about that today. Steve was pretty disappointed last night, so we'll talk more about XYZ when he joins. But that one got hit with 20%. Wait, why are you guys saying AO? Why are you guys saying pause? What did I say that was pause? Someone put in the chat? What did I say? That was pause. Amazon closed today at 189.98. My 190 covered calls were saved. Dude, sometimes, I've never experienced this, but sometimes after hours, if the stock goes past your strike, it still gets taken away from you. So I don't know. I've never experienced it, but I would imagine you're okay, even if it fell below. But I guess you'll see later here today. Yeah, it happened to you, right? Mooncake says it happened to you. Oh, you said I'm gonna eat your. Oh my gosh, dude. I meant Chicago, bro. He's from Chicago. That's why I said that. Goodness gracious, dude. That does sound kind of crazy, though. Oh my god. Oh, that was bad, dude. You know I haven't talked for the past freaking 4 hours since the market opened. I have not talked. I just tried to protect my voice. It's a little bit better, right? It's not as crispy or not as raspy, but this is the most amount of time I've just like shut the hell up and not said anything. Here's the heat map for the day. Look at this, bro. Absolutely incredible. Do you guys see this? Look at the only stock that's red. Apple. Freaking Apple, dude. Look at this. One of the only stocks that was red on the day. Berkshire Hathaway up 2%. S&P is up 1.5%. Google, Meta, Microsoft, Netflix, new all-time highs 2%. Oracle. Steve was getting really excited about Oracle a week and a half ago. That one's up 4%. Even Amazon still flat on the day, 0.19. Apple couldn't get it green. And I think that's because the market is just upset with the lack of growth and realistically the buybacks as the savior for this stock. And so as of now, they are not giving it too much momentum. Yeah, Meta, great day for Meta as well. Up about 4% here as well. Ain't no way you went 4 hours without talking. No, dude, I really did. I took a walk. It was really hot in Jersey, but it's like 80 degrees here. So I went for a walk, went to this like local park nearby, put on some music, tried to not say stuff. And it is a gorgeous day, dude. But that's what I'm saying. Like on a green day, it's kind of, your portfolio's green. The weather's good. You got to go out for a walk and gotta enjoy some of these moments. NVIDIA right here, 114.51 after hours. SMCI 33.83. Where is Palantir? Are we holding on? Wow, 124.37 after hours. Still going and not stopping after. So here's the question, dude. Who the hell was buying Palantir today? I know a lot of people in the chat probably weren't aggressively buying it. So who was? Was it money managers? Was it hedge funds? Was it retail gambling before earnings? Like this type of a pump is basically around a 30 billion increase in market cap. Palantir's market cap, are we over 300? Our market cap on Palantir is 293. So about 293 billion. I mean, it's up there. We'll have Palantir weekly tonight, and so we'll talk more about earnings expectations. Volume was 101 million shares. Volume was 101 million shares today. Someone knows something. That's another thing I feel like. I feel like someone knows something. And maybe, maybe that's not true. Maybe it's just pumping before earnings. But I feel like someone knows these numbers are going to be incredible. Granted, we've seen that many times over the past couple of weeks, like big inflows of options before earnings. Someone bought like $5 million worth of options on Snapchat into the close before earnings. I think the strike was like $9 or something. They lost everything, right? It got decimated. So it's not always a tell, but it could be somewhat of an explanation here on this momentum right now. Okay, let's go to Siegel. Let's see what he has to say and how he's explaining some of the rally that we're experiencing here today.
I think one thing that people don't realize is there's a huge tailwind. I mean, we know about the headwinds of the tariffs. There's a huge tailwind of the 10-12% decline in the dollar for the multinationals in terms of bringing profits back from Europe or elsewhere in the world. They're going to be enhanced. So some of the tariff problems are going to be offset by the fall, and not all of them. And let's be honest. American public has not yet felt the tariffs. They've heard about the tariffs. They're plastered on all the news. But for a lot of people, they say, "Oh, rising prices. I'll believe it. When I see it." And they haven't seen it yet. So, in many ways, there's a lot of talk about the bad effects of the tariff. But at this particular point, American public, even though it's the polls are not great on that issue, they don't yet reflect the full impact that they will see if Trump stays on the current course.
You think this, U.S. exceptionalism trade, which got so talked about over the last month or so with the activity we saw not only in the bond market, but because you do mention the dollar, do you think that was greatly exaggerated, that too much was made of that this is still the place where capital from around the world is going to flow? We have the best, we have the deepest market in the world, we have the brightest and most transcendent companies in the world, and this is where those monies want to be.
Yeah, absolutely. Listen, despite what maybe Trump will say, I mean, Trump is only going to be president for 3.5 more years. The exceptionalism, the deepest capital markets are the place where innovation, where you can market. We have a pride in innovating, bringing things to market, destroying the social order, so to speak, disruptive technology. That's all in the United States. And that, surpasses any president that we're going to have. Remember, stocks are our longest term assets. And really 3.5 years, people say, oh, it's going to be bad for 3.5 years. When you take a look at, how long the earning stream of stocks go, 3.5 years is really a very small part of the present value there. So, whatever you think about whether Trump is going to do good or Trump is going to go bad, the exceptionalism of the U.S. economy surpasses that by far.
It's unbelievably resilient. I think more so than many have even wondered in their wildest imaginations, from COVID on the other side of that until now. And maybe the worst is yet to come with the tariffs. We don't know. But this economy has had a resiliency that I don't think many people expected. And as long as the labor market, Professor, hangs in like it appears to be doing, we don't have to talk about recession every conversation, do we?
No, we don't have to talk about recession every conversation.
Again, that non-farm payroll data, this day would not be as green as it was if that came in negative. So, I mean, and that proves the labor market's not really struggling yet. Again, it's pre-tariff, but as of now, if the markets are pulling forward the expectation that the labor market is okay and rate cuts are coming, earnings are good, that's what gets stocks probably to be higher. Someone was asking, why are bond yields up? People are selling bonds to buy stocks, and that's what's pushing yields up, which is okay if stocks go up. If stocks go down and yields go up, that's when we have the issue.
That we have. However, it is still my prediction, unless he backs off on these and we get a lot of relief before that July, recession is still a possibility. I don't think we could rule it off, but I think the president is if you notice, he has softened the tone since the April sell-off. We don't get quite as many wild, up and down accusations one way or the other. I think part of it is his advisors. I think part of it is some discipline from the polls, to be honest. And I still think he listens to the polls, and people are very cautious. They're very skeptical.
Jim Cramer just says there will not be a recession. He said that at 3:40. He said that 20 minutes before market close. All right, folks, there you go. So you got Cramer's take. There will not be a recession.
The mainstream media, of course, is just blaring, oh, rising prices, everyone's going to be poor. People are waiting to see, and he has to listen to what those people are saying.
I know there are some who are listening to this saying, you guys are too giddy. You still got the tariffs. You still have an undeniably slowing economy. All of the employment numbers, the reads, they're all lagging. The worst is yet to come because business is still in a fog. Now, earnings, I think you'd admit, were probably better than you maybe thought they'd be. And many would be in that same boat. You are actually getting guidance to a degree from some, and maybe more so than you expected as well. And that's helped sentiment too.
Yeah. Well, I really like what General Motors did. They actually, sat down, studied the tariffs that they're under, and actually said if under those tariffs, they're going to take a $4.5 billion profit hit. I think a lot of CEOs have really punted their call. Oh, we don't know what's going to happen, so we're going to yank guidance. I mean, I think it's incumbent on management of all these companies to sit down with likely scenarios and tell us what they think was going to happen. And I think, Trump and his crew has to hear that also. So, I give credit to General Motors. They really did their homework. I wish some of the other firms did, because otherwise, certainly what earnings are going to be in 2025 are a big question mark right now.
And so far, Q1 had good earnings. Again, that is pre-tariffs, but I agree there is a big question mark right here in terms of what the earnings picture overall will look like. And that's where Q2's data will be incredibly important to see where the markets are. Steve will be joining in about 5-10 minutes. He just texted me. He's getting out of the office. He'll be joining in his car, as always. So you might hear some beautiful New York City sirens today. And we'll get his thoughts on the market. 10-year again, 4.3. Not great to see, but it's not a bad thing as stocks do well. Stocks going down and the 10-year going up means there's an issue. That means people are probably going to gold, but stocks going up just means people are rotating out of treasuries into equities, which is obviously a great thing for all of us as investors. Now, where was gold today? Gold was up a little bit. Gold is down. I think gold topped out at 3,500 an ounce, right? So this one, 3,200. The kind of short gold, I guess, long S&P trade the past 9 days has not been a horrible trade. The opposite of that back in April was the right trade. But you got gold right here up just slightly on the day as the stock market was up 1.5%. All right, what moves did people make? Let's talk about that. What moves did people make? Did you sell covered calls? Did you sell any stock? Did you buy any stock? Did you buy any dips? Like, what did people actually do today? Ed says, appreciate the membership. Yes, thank you to Dragos again, who gave out 50 memberships. I was trying to read the people that got memberships, but I think the chat went too fast, so I couldn't see exactly who got the memberships. But 50 of you, if you got the membership, there's a little green thing on your name. The membership doesn't come with anything. I don't do any exclusive videos or anything like that. It's just to support the channel. So thank you to Dragos for those 50 gifted memberships. Okay, Michael said he sold some covered calls on Palantir. That's fair. Davis says I sold some puts and calls on HIMS and I bought more HIMS. Okay. We know Davis loves HIMS. That's for sure. He'll get that joke. Someone says sold HIMS and bought Confluent. Interesting. Dude, Confluent, I know a couple people that work at this company. I don't know exactly what they do, but it's always been an interesting one to me. Market cap on this is what, 8 billion, 7 billion? Yeah. It's one of those SaaS names I think we got to look at a little bit more, but don't really have a thesis on that one at all. Marcus bought some Hood. Okay. Bought Palantir, HIMS, Uber, and Color. Color's that Bitcoin MicroStrategy kind of copycat company, 1.32. I think they do something in batteries, something like that. So that one was up about 4%. Tesla right here, 287 again on the day. Matthew said went year-to-date positive today. Yeah, I asked about year-to-dates already. If you guys want to still put it in the chat, feel free to. I think most people are positive, and if you're still negative, you're very close to positive, which is not horrible. Raj said I sold some Palantir covered calls on the 155 strike. Not too bad either. Bought more AMD. Okay. More covered calls at one. All right. So you guys are hedging. It's not that crazy. So people are betting that the stock could go up, but it might not go up another 20, $30. And as a result, we do have some covered call hedging right here. Bayray says, I did nothing today. Sold a lot of covered calls on Hood before earnings and after earnings. I had 10 covered calls at 54 for May 9th before earnings for Hood. So it's a part of my position, but not the whole thing. And that one seemed to have worked out so far. Sold MicroStrategy calls. Dude, I just like the people that bought MicroStrategy early in 2024, like the amount of call premium you can make on this thing, it is absurd. The problem is I wouldn't actually buy it to sell calls against it because it's so volatile, which is why the calls are so juicy. But if you bought the damn thing at like even $100 back in 2024, and it was trading at almost like $40, I think at the lows of February, covered calls on this thing are incredible because you're already up so much on the equity. If the shares get called away, it's kind of whatever. And there's a lot of gamblers in MicroStrategy, dude, that just pay juicy premiums. There's always a catch with a stock that has really good premiums. That's why I was so impressed with HIMS today. I guess the catch is that The GLP narrative is really what's accelerating their momentum. And if there's any like FDA case or whatever that we've seen happen multiple times, that can go away and then the stock could tank. And so that's why there's all this call premium and volatility. But it's hard to find a stock that has really good call premium and doesn't have something associated with it that is a little troubling, like a Tesla. Great call premium, but unfortunately, Tesla's valuation is up there, right? And anything could happen. Same thing with obviously MicroStrategy right here. Same thing with Coinbase. Coinbase has great premiums, but Coinbase is attached to Bitcoin and Bitcoin is volatile. So there's always something that's there. But then there's other stocks that don't have the craziest call premium, but they're still great companies like NVIDIA, which has great call premium as well. Okay, cool. Let's see some other headlines that we got going on. Nothing that crazy. Nothing that crazy happened today, to be honest. I mean, Trump didn't speak. In the morning, Trump got rid of the Harvard tax exemption, but that happened in the morning. Oh, here we go. We got something. Temu announces that it is halting all direct shipping from China due to the ongoing tariff situation. Wait, how's that going to work? Temu announces it's halting all direct shipping from China. Wow. Huh. So if we order something from Temu, the only way we're going to be able to get it is if one of their other warehouses across the world ships it to the States, given they, I guess, don't want to go through the 145% tariffs. I guess that could be the argument here. All right, so we got something like that going on. Again, I showed you guys the hedge fund data, that hedge funds have their largest short exposure since 2022. S&P 500, 9 days in a row, that was green. The S&P, here's a couple of stats that are really interesting to look at on the S&P 500. So 9 days in a row green. Over the last 20 years, a streak like what we experienced today, 9 days in a row, has happened only 7 times. So truly, this is historic. The S&P 500 has rallied 17% since its April 17th low. We had that 10% intraday when Trump paused the tariffs, and has recovered all of their post-April 2nd Liberation Day losses. During this time, the index has added $6 trillion in market cap. I think at the peak, we lost $11 trillion, so we got about $5 trillion left to recover. And as a result, the S&P 500 is down 5% year-to-date, up 15% from the bottoms 3 weeks ago. 2025 turning out to be a very historic year for the broader markets right now. It's pretty incredible, dude. It's pretty incredible. Uber as well, even though Tesla was green today, Uber, look at that. Oh, Uber signed a new partnership as well. Let me pull that up. It's with a Chinese company, actually. It is Uber is partnering with China's Momenta to deploy robotaxis on a ride-sharing platform in various global markets starting in Europe in early 2026. I don't even know what Momenta is, but apparently it's a company that can help them with robotaxis. Momenta, all right, here's the website. We leverage our AI capabilities to develop autonomous driving solutions to enhance safety, convenience, and efficiency of mobility. Momenta is a leading autonomous driving technology company pioneering a unique scalable path by combining a data-driven approach with iterating algorithms, referred to as our flywheel approach, as well as our two-leg product strategy focusing on both mass production, readily high autonomous driving solutions, and scalable robotaxi, our solution targeting full autonomy. Well, this is what Uber is going to do. They're going to partner with a lot of these companies to try to scale robotaxi solutions, given they don't have their own robotaxi. And that stock was up about 4% here on the day as well. Momenta. Never heard of Momenta. That's why AUR is up. Yeah, that makes sense. That's why AUR is up. How is PDD going to react to Temu? Well, they own Temu. Let me see if there's any reaction in the pre-market or in the after hours here. PDD. Oh, that's up 4%. That one's not reacting yet. I guess we'll see what that does on Monday. I mean, I don't know if it's going to have a massive impact on them yet, because Temu can still ship even if they don't ship from China. But that's obviously not the best thing for them. Where is Rocket Lab? Rocket Lab right here, $22.95. That was up about 4% on the day as well. Did you talk about Google and ASTS? Yes. So that's why ASTS was running today. We found out Google kind of converted their equity into action, or converted their whatever vehicle by which they invested. I think they bought like a call option to buy shares a year ago, and they converted it into shares today. I think that's what kind of happened. That's why ASTS was up 14%, because Google now owns 4% of the company, which is awesome. Celsius right here was down 1%. Wow. And then Google was up 1.5. Why was Celsius down on a day like this? That's weird. It was up so much in the volatility during April, and it's down on one of the best days. Oh, warrants. Yes, warrants. That's what they did. They converted their warrants into equity. That's what you got. I will switch to Steve when he joins. Again, he's getting out of the office and getting ready to join. I told him, I was like, dude, in the morning, people were begging for you. So he will be on, but we might have to wait a little bit before we get him. Did you figure out how to get after hours percentages? No, dude, I don't understand why Legend is doing this, because on Robinhood earnings, we had all the after hour percentages. So I don't know why because look, it's on extended hours mode. It's not like it's not. So I don't know. I feel like it's a bug or something that it's not showing that. It's being a little weird. And there was some bugs 2 days ago that you guys were seeing and I was seeing as well. But on Robinhood earnings day, it was working perfectly. So not sure why it's doing that. Because Weeble is better. Oh my God. Dude, the SoFi community must hate me, bro. Oh my gosh. Let's just say I talked with Tanner. This Twitter's blowing up, bro. Everyone's like commenting back and forth. And that post I put out, I knew it would start a war yesterday. Like as soon as I pressed post, I was like, this is going to go crazy. And it went crazy. Everyone, and the good thing is everyone got a lot of entertainment from it. So the people that are commenting that don't have a dog in this race, they're like, dude, this is better than reality TV. So it's good debate. People don't get that. I like the intellectual sparring. I enjoy it. I don't hate anyone in the SoFi community. It's fun to have a debate about it. Like, right, this, in the stock market, you have debate. It's what makes a market. Are you bullish or bearish? And how do you engage in that discussion? But Tanner and I are thinking of setting up a debate. It would be Tanner and data-driven investing, DDI. It's not confirmed yet. It would be 2 versus 1. And yeah, we're thinking next Saturday, let's have a real SoFi versus Hood debate. Not really a debate on SoFi versus Hood, but rather a debate on my tweet. My tweet was a very specific argument around net deposits, yada, yada. So it might be more centered and be more narrow. Tanner is like moderating and participating in it. So we'll see. If we do it, it'll be fun. It'll be exciting. I'm always up for a debate, dude. I'm always up for a debate. That's the one thing I'm usually never going to back down from. I have Data Driven like had this big post that he responded to in the morning after I responded to him in the night. I haven't responded all day, and everyone's like, "Oh, I'm scared to respond." I'm like, "No, dude. I'm just like I can't talk right now. So like you got to give me a day. I'll respond tomorrow, and I'll type up. I have a lot to type up. I just like I couldn't type it up today, but I read his argument, and I was like, I don't think there's an argument here. But I don't think there's. I'm sorry. I just respectfully, I don't think there's an argument here. So it'll be fun. It'll be a fun debate, and I embrace it. I enjoy it. Oh, I would love to debate Stockgoat. Oh my God, Stockgoat. That would be a fun one. I love that guy. That's a fun one. That's a fun one. Just to give you guys, while we're waiting for Steve, just to give you guys an example of like why I think these arguments are, I don't know if absurd is the right word, but you know, they're not good arguments. I'll use Tanner as an example because we went back and forth a little bit today. And we went at it a little bit. So he said, this was his argument. All right. So this was his argument. Okay. Let's bring this up right here. Do you still coach kids on the debate team? Yes. Those 3 kids in California, I still coach them. They're going to be juniors next year. So excited. They had a good year, but you know, they're sophomores. They didn't have like a really winning year. Next year, I think they could be top 15 in the country. So going to be exciting to keep coaching them. Okay. So here's what Tanner says to my argument. I explained my argument in the morning. TLDR, SoFi does $2 billion in deposits. Robinhood does $18 billion in deposits. I said it's wrong that SoFi doesn't disclose their monthly active users because that means they're scared to show their engagement. And it's obviously in the net deposits. The fact that they can't bring in more than a couple billion in deposits means that their users aren't engaged. That was kind of the thesis of my argument. And it was inspired not by being bearish SoFi, by someone saying Robinhood is a tool, SoFi is an ecosystem. And I was just like, I disagree. And here's the net deposit argument to kind of prove why I disagree. Tanner says, to answer the question, how many monthly actives does SoFi have? It doesn't matter. It's not a metric that changes their revenue or profits to any meaningful degree in the same way that it would a tech company like Facebook or even Robinhood. Facebook is a good example of this because they literally get paid for time on the platform through ads. So MAUs and DAUs are important. SoFi gets mainly paid through lending, interchange, capital market deals, and B2B deals, Galileo, all the metrics that are very well tracked and shared with investors. Here's my response. I'm just going to read it word for word. So I'm not going to mischaracterize what I'm saying or what Tanner's saying. I'm just going to read them word for word, and then I'll give my analysis. I said I completely disagree. SoFi wants people to get their money right. That requires using the app. The idea that a company with top 15 tech company ambitions wouldn't disclose how many people use their product is absurd. Imagine if Hood left that data out. SoFi is still a consumer finance company. They say MAUs are not relevant to their metrics. This is BS. I want to know when they sign up a member if that member even uses their product. I signed up for SoFi 2 years ago. I'm part of the 11 million members. I don't use it. Imagine there are many millions of people like me. The 11 million number starts to sound pretty bad. If you can't report your monthly users, it's not because it isn't relevant. It's because you're scared. Most people don't check. And then his argument was like, most people don't check their stock app. But my argument was SoFi is not just an invest app, but a full online bank. Everything is done on the app, AKA you can't go to a physical SoFi location. Everything's done on the app, right? So you can't walk up to your local SoFi. How can they go 1 month without their users not checking it? Like, how do you go 1 month if all your money is in this banking app, which is an online app? How do you go 1 month without, like, I just don't, like, do people go 1 month without even looking at any of the stuff they do on their app? You can get your money right by not looking at your bank account a minimum of once a month. Doesn't make any sense. This is a horrible argument for a company that says they're a tech company. Every tech company discloses their active users, even if their numbers suck. And for those that are saying you can go a month without looking at your bank, remember, an online bank that's a one-stop shop that has all these integrated features, aka things you want to upsell, you need people to look at the product to upsell them, right? It's not like JP Morgan where you can just put your money and then go do what you want with your life, because JP Morgan has $10 trillion of assets. SoFi barely has 30 billion. So the idea that they shouldn't be incentivizing people to use the product, I mean, it's insane. Like the one-stop shop for financial services should be incentivizing people to use it and should be reporting to investors that they have monthly active users. Then Tanner responds, and he has some charts right here. Monthly active users aren't even important for Hood. Monthly active users are showing off a different picture than reality. Hood's revenues are growing, margins are expanding, and the TAM is growing. Monthly active users would make you think that they haven't surpassed their 2021 highs. That's not true. Financials are much more important than how people are checking their portfolios. So basically, Tanner's argument is if you look at 2021, MAUs are down dramatically. There were 21 million MAUs back in the bubble of 2021, GameStop, all that stuff. Now there's 14. So Tanner's like, wait a second, all the revenues have gone up dramatically, but the MAUs are down. So why do we need to talk about MAUs? And then I said, financial activity on Hood is based on people coming back every month. Hard to trade or put net deposits in or bet on the prediction markets without checking the app. Every metric you care about, net deposits, revenues, interest revenues, all that stuff are contingent on people joining the app daily, weekly, or even monthly. If it's all financials, let's just not discuss new users. Why do we have to report how many users they get a month if we're not even caring about how active the users are? And then Tanner says, I literally just showed you that MAUs don't correlate to financials. Then you say they have to. Brother, I literally just showed you with your own company. This must be some debate tactic or something. I'm bullish Hood and SoFi, by the way. And then finally, this was my response. I'm telling you that MAUs absolutely correlate to financials. On Hood, MAUs are down from the peak in 2021. I am not saying this is the only metric to use when looking at a business, but, and this is a big but, and this is a big one. If MAUs were 1 million a month with users at 25 million, I think all of us would have an issue, right? All of us would be like, wait a second, hold on. This is a problem. Why do we only have 1 million people checking it every month, but we have 25 million users? So the fact that Hood discloses it obviously means they think investors should know how many people come back a month. It is not the only metric, but it is absolutely an important metric, especially for a company like SoFi that wants to upsell you. How do you upsell people? Well, you have to get people using your product. Facebook has to get you to come back to the app. Netflix has to get you to come back to the app for you to get more engagement and for them to be able to monetize you. You need people coming back to the product, I would imagine at least monthly, if not daily or weekly, in order to do that in a consumer finance company. So, that was my argument. And I think with Tanner and DDI next Saturday, hopefully we'll go a lot more in depth to go from there. But, again, this is like, I can't even comprehend the argument. If SoFi is a consumer tech company, what's the problem with disclosing their MAUs? They have 11 million people. What is the downside to saying how many people use it per month? Think about that. But let's just think about that. Like, what is the downside as a small company that's in its infancy of growth, that has top 15 tech ambitions, to put out how many people use it per month? I don't see any downside other than not a lot of people are using it per month. And the net deposits is showing me a lot of people really aren't using it per month if they can only get 2 billion in net deposits compared to Robinhood's 18 billion. So if the argument is, well, MAUs aren't correlated with business success, I just fundamentally disagree. They absolutely, if Robinhood had 1 million monthly users, but 25 million accounts, I'd be looking at Vlad like, how are you getting all these users, but you can't get them to actually use the product? It's insanity. It would make no sense. So the downside is transparency, and Noto hates transparency with investors. Well, I think from this perspective, this would require a strong level of transparency. And if the numbers aren't good, then Noto probably wouldn't want to give that transparency. Like, I just really don't get it. MAU, yeah, absolutely. They're an important metric of stickiness. This is a look, I don't really check my Bank of America app. I definitely check it at least once a month because I still so people saying they don't check it at least once a month is insane because that's all you have to do to be an MAU. You have to just open the app. Like if you touch Spotify once a month, boom, you're an MAU. They got you. They get to report you as an MAU. So I definitely open Bank of America once a month. So it's kind of absurd to me that people are saying, well, you don't have to look at your bank once a month. But Bank of America is not where everything is integrated for me. It's just where I do my business checking. Ironically, I would have gone to SoFi long ago if they unveiled business checking because I don't care about Bank of America and I have no allegiance to them. And they have a crappy interest rate, but they have a business account. So I go there. On SoFi, the vision, the big picture is you do everything in this one app. How does that not require reporting the amount of people that come to the app every month, at least? Like Grab reports their monthly active users. They even report their daily active users. So I'm just like, and what if it's like 8 million people use it a month? Why wouldn't they disclose that? They have 11 million users, 8 million. That's a great ratio of MAUs to overall users. Like you should absolutely disclose that. Like what's the downside? Well, maybe the downside is they don't have a lot of people like me using the product, even though we signed up and we still count as a member, but our membership is relatively irrelevant. Relatively irrelevant. I've said that many times and I don't know how I come up with it, but it basically becomes irrelevant because we don't actually use the product. So Grindr reports Amit as a daily active user. Of course they do. I open my Robinhood app 1,000 times a day. Well, yeah. Look, this stuff matters, bro. This stuff matters. And I think a lot of the SoFi bulls think they can weasel their way out of this by just looking at the data and the charts going up and to the right, but not focusing on the actual engagement of the product. And to me, that's where I'm like, okay, we have a fundamental disagreement on how we conceptualize the way we think of these companies. All right, let's get one of our favorite analysts on the show so I can save my voice a little bit and not talk too much. All the way from beautiful New York City with the sirens in the background. Steven Fiorillo, what's up?
I have a rant to go on.
I need to save my voice, so go ahead.
I just got a text from my wife, and she asked me if I heard that Hochul just signed something else in the law, so we're going to pay more city taxes. And I said, no. And she said, lucky us. And they wonder why people are leaving New York City.
Hochul is the mayor or the governor?
Hochul's the governor.
Okay.
And I have not heard this, so I do not know if it's true or not. But once again, just as I tell everybody in the building when I have our annual shareholders meeting, when you cast a vote for your local politicians, you should look at what their policies are. And I got to tell you, I have no idea what's going on in New York anymore.
So wait, what exactly are they raising? I
don't know. I don't even know if it's true or not. My wife heard that they're raising some city taxes. And
city taxes. Okay.
It's like you just saw how many people, like the study just came out about how many people left New York City over the past 3 years. The answer is certainly not taxing more.
Why don't you run for mayor and change all this?
I would never run for mayor. I would never run for anything.
You should run for president, to be honest. That would be fun.
No.
Imagine you calling in on the market close as the president. Well, that would be.
No. I would never do anything. I have enough headaches being on the board of my building, let alone an actual community, like something bigger. You know what I mean?
All right, Steve, I got a treat for all of us. We got someone else who's joining us today, so we'll all be able to talk about the 9th green day of the past week for the S&P 500.
Somebody I already talked to today?
It's somebody you know, Christopher Patel.
Oh, look at that. I talked to him for a while today.
You know, I've been watching certain data points come out recently because I'm like, I think everyone is focusing on the short term. I'm trying to look out like a year to 2 years ahead. And dude, I don't know about you guys, but I see like a massive deflationary wave coming our way.
Tell us more.
Okay, so
well, actually, hold on. Before we get into that, I just want to get your both raw reactions for 30 seconds, then we'll get deeper into the numbers. Steve, Ninth green day in the row, S&P. Are you feeling good? Are you happy? How are you feeling?
No, I don't care.
Okay, of course. Kris, are you feeling good? Happy today?
Yeah, I'm happy.
Okay, at least Kris is happy. All right, go ahead. Why are we going to have a deflationary spiral?
So some of the key data points that I've been keeping an eye on, primarily since the Trump administration came on, one of the major ones is, of course, population growth. Like we've had a surge in population growth over the last 4 years, primarily because all these, pretty much illegals were coming in through the southern border. And I'm not talking about like a small amount. These are like millions of people. Well, right now, one of the policy changes that came around after January 1st or January 21st is that the border is shut down. Like if you look at the number of people crossing before, it was close to like about a million, give or take. Now it's basically like in the single, like maybe like 15,000 per year, which is about 38. And on top of it, you've got a ton of interior removals. So you're starting to see this kind of population growth starting to go back down again, and natural population growth is stalled, like well below replacement levels. So you're kind of seeing like the population growth numbers and coming out like probably in the next 2 years is going to be much, much lower. And usually that's a sign of deflation, right? Because less people equals less demand for goods and services,
Right.
right? The aggregate demand goes down. That's a pretty simple, basic concept to understand. So that's one thing. Rental vacancy rates are starting to climb again, and they're back to pre-COVID levels. Especially if you look in certain cities, rents in certain cities are actually declining year over year. So that's another thing. And then on top of it, you're starting to see inventory increases in active housing inventory, primarily because you've got this generation of boomers that are like passing away and leaving their homes to their kids, but the kids can't do the maintenance on it, may not live in the same city, whatever, and they're basically selling. And that's putting upward pressure on inventory. Now, there is a lot of housing lock-in from people where they have like sub-3 mortgages that they're never going to leave. But the thing is, like, life has a way of making you make those decisions regardless whether you want to live there or not. So, you have health issues that could cause downsizing or upsizing. Like your kid, you might have kids, your kids might move out. Like all the steady flows that usually come into that are starting to kind of reverse. One of the things that you're seeing is this outflow from New York and into other parts of the country. And it's the same thing in California as well. The cost of living in California is just getting out of hand. So it's kind of like, okay, let's kind of move to other parts of the other country. And so that's natural. But the apartment vacancy rates are probably one of the things to really watch out for. Because I think if this keeps climbing up, and the thing is multifamily construction, if you look at like multifamily construction, like or completed, those are starting to come in kind of strong as well. So you've got this wave of shelter deflation. And the thing is their numbers, if you look at it on the inflation side, they're still reflecting like a 4% growth in shelter, but that's like backward looking because like the way that these guys calculate their numbers is a little bit, in my opinion, wonky. They do owner's equivalent rent, which theoretically is like kind of a bullshit way of doing it, but whatever. So when you look at the actual data, look at that. It's flat, super flat.
Steve, you agree we're going to get some major deflation soon?
I guess I'm the oddball out because I don't think deflationary times is going to do much for the market. I don't think it's going to be a big impact. I think you're going to see a lot of streamlined processes and a lot of efficiency gained by AI. And I think there's other things to worry about.
Well, I'm not necessarily saying like this impacts the stock market or anything. Like even if we start getting like cuts, usually it's really good for the stock market when you have the Federal Reserve cutting, right? Because that it helps kind of like.
Did you see where the Fed is projected to be at the end of next year?
Like what, like 3% on the Fed funds rate?
Yeah, they're only expected to go 125 bips by the end of next year. I thought it would be more.
I think it's actually going to be a lot more. I mean, this thing changes pretty often.
Kris, how many cuts do you think we get this year?
I mean, it's all going to be dependent on the data, right? If we get inflationary wave hit us from tariffs and trade war, then we could theoretically not get any, because what's going to happen is services inflation is coming down, but goods inflation could go up. You know, goods inflation has been negative actually. If you look at like, so you have to break this down into two components, goods and services. So go to goods inflation. Go to Fred goods inflation year over year.
Okay. Is it for durables, right?
Yeah. Not durable. Well, yeah, you could look at durables, but now do a year over year comparison. No.
Yeah.
Go to edit graph year over year.
Oh.
Change from a year ago. No, right there. Up above that, units, right there, change. No, there, yep. Go to units. There you go.
Yep.
That. Yep. Change from a year ago. Okay.
There you go.
There you go. Now you can make it bigger into like the 10-year mark. Okay. You see that goods inflation number, how that spiked up primarily because supply chain disruptions and all the other stuff, right? You can see that goods inflation has been literally either flat to negative for the longest time. And what that did was keep like a giant anchor on inflation rate. So right now, if you look at year over year comparisons, you can see that there's been slight increase in 2024, primarily because we've had a good economy, which means people went and got, spent money on things. And if that trend keeps going higher and higher, then we got a problem, right? So
right.
Tariff war could theoretically screw that up. Now, go edit the graph again and add line and add services inflation. Okay, so that's not professional. The second one. So yeah, services less energy. Yeah, and hit add to series. You might want to change it from dots to what is that thing called, to line. So go down all the way. Go to format. No, at the top right. Go to the format. Top right format. There you go. And go down. Yeah, change it to. Damn it! You have to go to like the other one. So go to line 2 and change it to,
dude, I got to learn how to use this. I don't use this.
Go down and put line. There you go. Now just do like you see how services inflation has stayed relatively higher, but goods inflation is down. So what happens is it kind of negates it and you get a nice average that comes out to be below, that 2% target. So, zoom this out a little bit so we can actually see this, see the metrics on this.
Thankfully, you're not asking me to go dark mode. Then I would.
Okay, so you can see services inflation, right? Right there. You can see services inflation hovers around 4 to 5% per year. But look at what happened after COVID. It jumped all the way up and it's starting to come down now. Now you're seeing these two things converge on themselves. Eventually they should get back to their normal ranges again, and I think one of the reasons why is because housing inflation really like set the thing high. So if you look at shelter inflation rates, like in the CPI figure, it's coming down, and it's coming down at a pretty accelerated pace. So, like I said, by next year, we could see shelter go from right now on average, it usually goes about 3% per year. It could go actually sub 3 and maybe into the negative, which might actually push services down significantly.
Okay, so I think that's a fair point, and that could obviously lead to more deflation. Let's talk about some stocks. Steve, I think let's get this one out of the way. XYZ, what's your take on those earnings?
I didn't even go through it. I just know it was bad. I'm gonna go through it this weekend.
Are you gonna sell? Kind of how are you approaching it?
No, I'm gonna buy more. I'm gonna buy my way out of the hole, and I'm gonna sell once I get somewhere close to even.
Is there anything in the numbers that could prove a reason for you to stay, or is it kind of like you're done with Dorsey?
I didn't even go through it, so I have no idea what the numbers even said.
But
all I know is they missed and they slashed earnings.
Okay, so given the numbers are bad, regardless of what you go through, you're probably thinking you're out of it.
Yeah, we got to see. I mean, part of my premise was a robust economy in 2025, and the beginning of 2025 has not been what I thought it was going to be. And we got to see. I still think there's a lot of positive aspects of the company. I just don't know what happened in Q1 because I didn't read through the report yet. So it's something I got to go through over the weekend.
Okay. Kris, in terms of the broader market, do you think, and this is a question for the chat as well. Let me ask Steve first. Kris, Steve, do you think the 9 days was fake, the green that we got, or the bottom's in and we have momentum to keep going higher?
The bottom was in when I told you it was in.
So you don't think there's any chance we hit 4,800 again?
No. I mean, look, this was a knee-jerk reaction. This was a situation where...
Wait, hold on. Let me push back a little bit. You say it's knee-jerk, but the only reason we reversed was because we got a 90-day pause, A, and then B, we got a retracement of tariffs of 145%, and then a reduction from these reciprocal rates to 10%. We had 3 things Trump did to get the markets to recover.
Right,
so
but the downturn was a knee-jerk reaction because the market went haywire off a piece of news that everybody knew could change in a day or a week. And nothing that was said was going to show up in Q1 numbers. And this is the problem with the social media age of information being in a 5-second interval, that nobody digests information or looks out. Nobody even took the time to wait to see what the biggest companies.
No, but hold on, Steve, I'm really confused here. You're saying it's knee jerk, but and everything you're saying in Q1 again is not affected by tariffs. But the reason Q2 might be good is because Trump walked back a ton of stuff.
No, I get that. The market going down was a knee jerk reaction to a starting point that almost everybody would agree was never going to be the end point. And the market got into a temper tantrum over something that was basically fictitious.
Okay. So your point is that if you were a hedge fund manager on April 8th, you should have been smart enough to know Trump's going to reverse and that the worst of it is priced in and you should have not sold.
Yeah, you can't have a bad stock market and a bad economy for too long. Otherwise, everybody gets annoyed and you screw up the midterms. And once again, you can't make decisions unless you are trading in real time or swing trading. You don't make decisions based on a week.
Kris, your thoughts? Do you think the bottom is in?
It's always hard to say because with the current administration, you don't know what kind of like things they're going to come out with. Like yesterday, I think Trump tweeted that if you buy Iranian oil, you're basically we're not going to trade with you or something like that. And, that seems like a very minor thing, but if you think about it, like some of the largest like trading partners we have, they buy Iranian oil, right? So the issue ends up being that with the current administration, there's so much volatility in policy that you can't say bottom is in, because you never know what the second and third level effects are going to be based on policy. I mean, when I spoke about this, like in January and February, I said, look, this is going to be like policy by tweet, which is going to be really bad for the markets. That causes uncertainty. And a lot of companies, they can't deal with that volatility, So I think we're getting this recovery, but this is under the premise that the trade war is starting to kind of let up a little bit. And I think the administration is on the right path again. But once again, there's no guarantee that they're not going to go on another path in a non-coherent manner and basically shock the markets again. So I'd say it's really hard to say what's going to happen. For me, I think uncertainty tends to cause value, like not margin compression. It causes like valuation compression. So it just means that you're more likely to see S&P trading between 17 and 20 rather than 20 and let's say 25 times earnings, forward earnings. Like at 25 forward earnings, they're just going crazy. So
Yeah, real quick, I was going to say we do have some breaking news. Trump plans major downsizing at all U.S. spy agencies. CIA plans to cut 1,200 positions, along with thousands more from other parts of the U.S. intelligence community. So, I mean, he's going to have to make some cuts to be able to pay for the $1 trillion of defense that he wants to ask from Congress. S&P is trading at 22 times. We're taking out $1 trillion for defense. We're probably going to increase the deficit. How are you guys thinking of that, Steve? Like, should we be putting $1 trillion into the military?
I mean, I've always thought that the defense budget is too high. I just don't think that I'm sure there's things that you can cut out of that, but I've never actually gone through it, so I have no idea. It just seems pretty high.
Okay. Kris, $1 trillion for defense. Do you think we can afford it? I mean, Kris, first of all, thank you. You served for this country. So how do you think of $1 trillion in defense?
I mean, we're not in any wars. I don't think we really need to spend on a ton of things that we're never going to use. I always like when the military spends on lethality. You know, you don't necessarily need to spend capital as much as a lot of people think. So, as an example, if you look at some of the nuclear boats that we have, like the submarines, they're billions of dollars. These are not cheap items. You know, so the thing is, spending $1 trillion is a lot. And I think for me, when I look at the country, I'm like, look, if we didn't have all this debt, it would actually make sense to arm up a little bit. But with our current debt situation, it makes no sense to go extra ham on spending, while at the same time you're spending all this additional money on just interest in a growing debt pile. So my thing is, the military should theoretically be cut. Instead of focusing on wasteful spending on large capital projects, it should be focused more on things that are going to provide the biggest bang for the buck. I mean, look, if the Ukraine wars taught us anything, is that you don't need a battalion of tanks. Like, you'd rather have, a battalion of drones, because the drones could be way more effective than those tanks can be.
Kris, you know what they're going to spend money on?
What?
Software from Palantir.
Well, that's a beautiful transition. I was going to start with Apple, but let's get right into that. I mean,
I'm sure that they will spend more money on Palantir. That's pretty much a guarantee. That's not the point, though. I think
it was a joke.
I know. Which is why
they're definitely going to spend some money on Palantir. That's for sure.
Yeah.
Okay, so let's get into that. Steve, 124, $294 billion market cap. Everyone was happy today. Chat was excited. Basically all-time highs. What is your take on Palantir right now?
I mean, everybody better hope that this is a banger of a quarter on Monday, because this is either going to 145 or 75. Everybody better hope that they put up meta-type numbers relatively to the size of the companies, but they need to have a blockbuster quarter, and they need to have blockbuster guidance. I mean, you can't even talk about price to perfection. This is price to stupidity, is what this is.
What if they have a good quarter, but then the stock sells off? How do you think of that?
I mean, I think that if they don't have an incredible quarter, this is going to 75 or lower.
So you don't think there's a stop at 100 and 95? You think this is really?
The numbers don't warrant it. And I love some of the responses and what I wrote, because people truly don't understand business. Palantir can increase every profitability metric by 100% this year, next year, and the following year. People talk about the rule of 40, which is bullshit. People talk about them compounding at 40%. So I doubled what everybody's talking about, and I'm compounding at 100% for the next 3 years. And they still won't generate the profitability levels that Adobe or Cisco are generating today. Yet it's a larger company than both of them. I mean, this is a company where a good percentage, I don't remember the exact number, I think it's something like 36% or 42% of their net income in Q4 was from interest. And the Fed's going to be in a cutting cycle the second half of this year. This is a company that is an amazing company, but they're trading at multiples that are not sustainable. I'm not even sure if Tesla traded these multiples. This is absolutely insane. And when you look at the forward growth that's projected, it's really not that exciting compared to where they are priced today. I mean, this is a $300 billion company. They're approaching Oracle territory. I mean, they're already bigger than Salesforce, Cisco, and Adobe, which makes 0 sense whatsoever. I mean, you saw the numbers. I put it out for everybody to see. There is no way Palantir can grow into the profitability that's generated by those 3 companies in the next 3 years. I don't think there's any way they can do it. They're not projecting anywhere close to 100% compounding, yet the market's giving them a multiple of a company that's generating more than $10 billion in EBITDA a year, and their EBITDA is like $400 million. It's ridiculous.
Kris, do you concur? How do you think of the valuation right now?
Yeah, 100%, man. The valuation doesn't make sense, but there's always going to be stocks that they don't trade on valuation. They trade on sentiment, right? And it's always about which direction is that sentiment headed. So right now, Palantir, the sentiment is behind it. They, like I said, they announce new contracts almost every other day. But the thing is, the value of those contracts may not necessarily be a meaningful add to actual business. So it's almost like, oh, Palantir signed a, like a $400 million contract with some big agency, and it's like, okay, that's over like 10 years. So that's like 40 million a year. So people are thinking, oh, $400 million contract, that's amazing. But it's like, it's over 10 years, which means, you're not going to see as much growth as you think you're going to see. And I think a lot of people are, focused on that. So for me right now, I think they're in the right direction in terms of their business growing, but the valuation on that business is just way over the top. Eventually it corrects, and eventually it gets back to more fundamentals. And I can't 100% say what those fundamentals are because it's really hard to determine that in SaaS. The only thing you could really do is like look at some of the other companies in the space and then weigh it against that to give you a relative valuation. And then you could probably put a premium on there for, some of the more, what is it called? Like fixed businesses that they get. Like they have a lot more entrenchment than some of the other SaaS companies. So that could end up being a nice premium for them. But once again, this is still like way, way, way beyond what any other SaaS company that even has higher growth rates, better free cash flow margins, and they're buying back shares. Palantir is buying back shares as well, but they're buying them back at such a crazy high valuation that it does nothing to add. It actually ends up burning cash by doing that.
I mean, bring up my tweet because I'm driving, and just show on the screen the table that I made.
No, I did already, but I'll show it again.
And I know that some people are like, well, look at the margins. Yeah, exactly. Look at the margins compared to Adobe. Palantir's gross profit margin is 81%. Adobe's 89%. Adobe's got higher profitability margins on every metric. And it's a $180 billion company. I mean, it doesn't make any sense. Palantir is running an amazing business. They're firing on all cylinders, and they're doing everything they're supposed to be doing and more. They are a leader in the space. That does not mean that this thing is priced correctly. Sometimes
why is it trading at these levels then? What's your thesis here?
Because nobody is freaking selling. Okay, sure. Look at some of the comments. I bought at 20. Why would I sell now? Yes, people have a lot of protection built in. But that doesn't mean that once it starts falling, you're not going to get a tsunami of people exiting. We got very lucky the last time it went to 68 or whatever it went to, and then it went back up. I don't know that happens this time around. And eventually, this is not going to be an exciting story because if the Fed cuts 3 or 4 times this year, which it looks like they're going to do, that's going to impact Palantir's profitability because of how much they're generating from their T-bills.
Unless their operating income margins go up, so income from operations.
Okay, there are things that can offset it, but it's going to hinder EPS growth. And you're going to be in a position where this is not going to be a company that this year or next year is generating 2.5, 3 billion in net income or EBITDA. I mean, they're not 10xing or 9xing those levels in 2 years. And that would still be a fraction of what these other companies are generating that are smaller market caps. It's just, I called Kris today and I told him,
Oh wait. You guys had a private conversation about Palantir without me?
Yeah.
Wow.
No, you were live.
No, I'm just saying. You got so upset at the price today. You had to call Kris and
No. I asked him if there was any feasible way to short this without getting screwed, because
this guy.
This is so ridiculous.
So why don't you buy puts? Just buy puts then.
Did you look at the premiums on the puts? I think this could go to 145 or 150 on Monday, maybe 160.
Well, you're answering your own question then. I mean,
the price on the puts is not worth the gamble. The premiums are sky high.
Kris, would you short it?
Nah, man, it's just too much
Momentum.
Yeah. The thing is, when it comes to investing, if you look at like the year 2021, right? There were people that bought Tesla at $400 a share. $400 a share in 2021. Okay. They're still sitting on those shares and they have zero gains from 2021. 4 years, zero gains. Why? Because they bought at the top of the market. Now, the thing is, you can't really say what the top of the market on a company is going to be, 100%. But god damn, like Palantir is at that level now where they've gone absolutely insane. The valuation is up there. The business is going to have to continuously perform, and eventually they'll grow into that valuation, which I have no doubt. My long-term thesis on Palantir was that this is going to be a really great company long-term. But once again, everything has to have a time. And the thing is, when you buy things at such a high valuation, you're basically taking on more and more risk, right? And remember, the goal here is that you want your portfolio to grow over a long period of time, right? And you want it to keep compounding. So if you buy things at the top, it doesn't mean you're going to lose money. Like, I'm sure that people buying at 120, if your plan is I'm not going to sell for the next like 20 years, I'm sure you're probably not going to lose money. Hell, you might actually make some money, but the rate of return that you're willing to accept at the current price is very, very low. So if you look 10 years from now, maybe Palantir will be, at 240 and you'll be like, look, I doubled my money in 10 years, which is great. But in terms of like,
unless you bought it at 10 and your average is in the 15s, then it's, then it's, I would assume you both agree. If you bought it at $10 and you have a, I don't know, $20 average or whatever, if you hold on and it goes to 200 by 2040, you're pretty happy with it.
Yeah, of course.
Yeah, a lot of people.
Which goes to the point of when you guys say, the one thing I have an issue with is when you guys say the valuation is absolutely crazy absurd. I agree quantitatively, but if Steve, your point is no one's selling because people have it at $20 and they'll ride it all the way back down to 20, back.
But once again, why
is that crazy?
But why would you not take a profit? Like, you already got a 10 to 12 bagger, and this has happened before. This looks exactly like Cisco in 2000. Exactly like it. The chart about Cisco and NVIDIA is ridiculous. It should be Cisco and Palantir, because Cisco was trading at very similar multiples. They were doing, I think, 12 billion in revenue and 2 or 3 billion in net income. And now 25 years later, they're still not trading at their 2000 levels, yet their revenue has 4x. Their profitability is 3 or 4x. The company is a much bigger company, diversified into services and software, not just hardware, yet the company still is not traded where it did 25 years ago. And Cisco was at one point ahead of Microsoft, the biggest company in the world or in the market, and expected to become the first $1 trillion company. So this can absolutely happen again. Maybe Palantir is the one company that breaks all the rules, but not even Tesla could withstand crazy valuations. Even though it's still crazy here, it was a lot crazier, as Kris said. Every company has gotten chopped in half at some point. Even Apple went down 40% in 2022. You had Meta go down. You had Amazon go down. I just can't see Palantir. When I see tweets about 500 and this, I don't see that happening without a huge retracement first.
But hold on.
Has ever gone straight up.
We had a retracement from 125 to 60.
That was a retracement with the market. That wasn't a true retracement. That was a retracement with the market that just rebounded when the market rebounded.
But the market hasn't fully rebounded.
Market's pretty close to rebounding.
We're still 10% away from all-time highs. I mean,
we were down 23%.
Yeah. So here's my point. If you're saying that Palantir, independent of the market, will have an opportunity, you think Palantir will be $50 again, independent of whatever the macro is?
I don't know if it's going to get there or not, but I think that this is a company where when you look at where it's trading versus any other software company that is in that 150 to 400 billion market cap, there's no way that it can continuously do this unless it compounds at numbers that are far superior than every other company.
AKA, it has to show really good growth.
Yeah, it doesn't have to retrace, but it can't put up 35% growth and people expect it to stay here. Now, if it puts up 45, 50% growth, I think it could definitely stay here because you can make a case for certain things. But unless you have very, very high multiples that you can't get anywhere else, I think it's going to be really hard for the valuation to stay at these levels. I mean, you're trading at 600 times profitability. That's crazy.
Rob, thanks for the $5 super chat. Steve, what is your best and worst case scenario again for Palantir?
I don't know. I wouldn't be surprised if it's 150, 160 after hours on Monday. I wouldn't be surprised if it's 75. I think it all depends on what the growth rate is and what the guidance is. I mean, keep in mind, what was the original guidance from Palantir?
Well, so here's the thing. Matt pointed out that even if they're flat in terms of if they don't beat guidance, they're going to grow 31% year over year. So like we should be expecting a 30% quarter minimum. And then if they, pull up with 38% or who knows, 40%, that would be the big number psychologically. Obviously markets could rally off that as well. But they've got to put up, basically this is an opportunity for Palantir to show they can put up $1 billion in revenue this quarter. I don't know if it's going to happen this quarter, but if it does, then, we've got a lot more growth.
Right. But their original assessment was that they were going to do $4 billion in 2025, correct?
That was, 2 years. No, 4.5 is what Karp said 2 years ago.
4.5. I mean, they're basically going to hit that number this year. Maybe.
No, they guided for 3.9 this year. So they're 600 million short.
Yeah, but they're probably sandbagging a little bit.
Yeah.
I mean, maybe they hit their original numbers and everybody who is investing, people didn't even like those original numbers when we were buying it. So I don't know who the hell is buying at these levels.
Well, that's the question, right? Like, Kris, who do you think is buying Palantir right
now? I think some of it could possibly be high frequency traders. Some of it is, of course, a lot of it is probably retail. A lot of people are FOMOing into it as well. So I'd say probably, a combination of all three. It's really hard when the casino is running hard to basically get out. And the thing is, people eventually find out the hard way. If you've got this crazy level of success in a short period of time, your thesis is always going to skew towards I'm the smartest guy in the world. I think this just goes up forever endlessly. So, people will be in the community that stay forever, and that's fine. It's their prerogative. And the thing is, it's just how the market is, man. My biggest contention right now with the current valuation is that once again, they're trading at such a high multiple that eventually that business is eventually going to get back to its mean, and there have been companies that we've spoke about in the past that have been in the same position. I mean, you remember when we were speaking about Enphase on what is it called? On not Cash Flow Chronicles, on Finance Junkies, when it got to the $300 level. And you were out, and it was like, well, how does it go that kind of valuation? And then you figured out that, wait a second, this was just a cyclical boom in a specific industry that caused the valuation to explode.
But Palantir's in the AI space. Don't you think there's a bit of a difference here?
It's in the SaaS.
10-year story.
I think AI is a tailwind right now, but any what's that called? Any sign that there's going to be a slowdown in AI spend, we'll see this massively correct to the downside. It's the same thing with the internet. When the internet came out, everyone's like, oh my God, that's why Cisco got bid up so much, because everyone was correct that the internet was going to be huge and this was going to be the future. And I think AI is in the same boat where I think it's going to be huge and it's the future. But that doesn't mean that you should be willing to pay crazy amounts of it on a company that, is still getting its feet together when it comes to this specific industry.
And keep in mind, Every SaaS company is an AI company. People are acting as if Palantir is going to replace Workday, Oracle, their ERP suite, Salesforce. That's what Palantir is being valued at right now, which isn't going to happen. I mean, I know everybody wants to think that Palantir is going to be the one software to rule them all. And
what if it doesn't happen? But what if they get close?
I mean, if they were really smart, they would build a killer ERP system and enter that space and compete. But I mean, if they don't, people are never leaving those products. And if they don't leave those products, there's less of a reason to go on Palantir's software because it's just one more business expense. That's something that people have to understand. It's business 101. In order for Palantir to break into the companies that they're not in right now, you have to make it where companies are willing to spend more money on another piece of software. And I don't see that happening unless they're able to fully replace other ERP solutions. And they're not able to replace Workday or Oracle or Microsoft Dynamics right now. They're just not. They don't do payroll, they don't do HR, they don't do finance. And those softwares have models that do overlap with some of the stuff Palantir does.
There is a lot of stuff like Warp Speed. Sham did an hour-long conversation today with the new companies in their Warp Speed like pilot program. It's kind of insane what they're doing in terms of reindustrializing America. Like there's a lot of stuff they're doing. Maybe that's not like payrolls, but that is going to be very valuable over the next decade.
I'm not saying it's not going to provide value, but when you're running a business and you have to have all these other software platforms, an additional expense may not be in the company's best interest, and they may not be able to afford it. Palantir needs to get to a point where they can start making the case where, in addition to all these other things, we're also going to allow you to get rid of this expense so you can buy our software. And we're going to take care of everything your current software does plus more. Like, companies don't have infinite amounts of money. Like, not every company is a Fortune 500 company.
Okay, so here's let me pitch this argument to you guys, because I was thinking about this today when I went on a walk and I was trying to tell the geese about Palantir hitting 124, but they didn't care. There are certain stocks that develop a range that they trade at. We're not talking about the company, we're talking about the stock itself. And because there's so much volume in terms of buyers and sellers, hedge funds, money managers, retail, etc., option premiums, that it creates a range where the stock stays at, irrespective of the fact that the business may not be catching up to the current valuation. Do you think that's happening with Palantir? I mean, this thing is being traded 100 million times a day. Obviously, earnings have been good, but I agree with you guys. They have not justified a $300 billion market cap. Do you think there's a world where, if you want to call the range 60 to 120 or whatever, that's where it trades simply because everyone is buying or selling in that range?
I'd go tighter than that. I'd say the range is more like 75 to 105 for the band, and you get a little bit of an outlier right now. But yeah, I think it is trading in a range.
So if that's the case, again, for the longs, if Palantir goes back to 75, I'm not losing sleep at night.
No, nobody is.
So then,
except for the people that are buying here and getting stuck,
which they deserve if they get stuck, right? That's just like, that's on you.
Yeah, I'm just saying, I don't know who the hell's buying it here, because if you're buying it here, what are you really buying? Like, what do you really think the upside is?
Kris, do you have a take on the idea that it stays within a range and that could keep it elevated regardless?
Yeah, I think so. I think once it gets to a certain baseline, there's going to be people that are going to FOMO in. I mean, from what I can tell, the story is very similar to Tesla, right? So if you look at Tesla, it went all the way up to 400, came back down to the almost like 100s, right, at its lowest point, then started to ride back up again, went back to like the 300 something, almost 400 again, and now it's back down to like the 200s. And basically it trades on the CEO's confidence in being able to produce. And so even if the overall numbers start looking, not as great, like let's say right now, if you look at like last quarter, if you look at their SG&A, it actually went up. Their OPEX, operation expenses, went up. So their net income wasn't that great, but they also had a ton of interest income coming in from their treasury holdings. which ended up boosting things up. So it looks like, oh, look, the company is doing okay. But when you dig down deep, it's like, hey, is the business really growing as fast? Is the business actually deteriorating to some degree? Are they having to heavily discount to get additional business? All these things eventually play out. And I think this is where the market and sentiment is going to determine which way this company moves. So I think right now there's definitely a baseline and a floor price that if it starts to get near it, I think there's going to be like a wave of retail investors looking to buy into it, fearing that they might miss out on a huge move up again. And so that's where you could, theoretically determine like, oh, this could be a base. Like I said, I don't think this company trades on valuation. I don't think it ever really will trade on a value like a true valuation. So I don't know. It's hard to trade. It's hard to buy a stock at this price, but that doesn't mean that it's not a bad idea to trade it. So when it gets down to a certain price, buy it, expecting that there's going to be a ton of people looking to buy, and once it rides up, sell it at the top, and then keep doing that over and over.
Steve's gonna be back in 5, guys. All right, so Kris, we'll transition from Palantir. I wanted to talk about Apple because I thought this was a very interesting earnings report. They were down on a day where the market absolutely ripped. Is all hope lost for Apple in terms of their innovation, or how are you thinking of this company right now?
I mean, there's still dominant market share in phones and like the computers and everything else. They're still buying back 100 billion shares. There's no one disrupting Apple, in my opinion. They could theoretically lose some future profitability from high margin services that they get from Google, because Google pays a good, I think almost like 20 billion a year to Apple just to basically have like Google as a default search browse, on Safari or something like that. So if, let's say, in the future, they didn't have that because of some sort of antitrust litigation or whatever, that could impact them on the short term. In the long term, I mean, what is it trading at? What's the PE right now?
35.
35. I mean, that's still pretty high relative to its share buyback program. It should trade closer to maybe in the 20s, but which means that it's overvalued right now. But then you also have growth markets in India, which could provide huge.
But hold on, if Apple should be trading in the 20s, this thing's going back to what?
Not 20.
No, the PE in the 20s, right?
No, but remember, they're doing a ton of share buyback, so it's hard to determine like how you would.
But that's my question. So Apple's basically spent $800 billion over the past decade in buybacks. Do you think that has been the biggest mistake?
No. Why? Look at their stock price. Look at the share price. All the shares that they bought in 2015. Look at the amount of appreciation all those share buybacks did. Look at it.
Well, I mean, but where's the future growth? I mean, if they had invested in AI or robots or cars, right? Like,
there's no guarantee that they could have
made 800 billion.
There's no guarantee that they could have made that money.
But isn't that the point? You have to take a risk as a company with investing, right? You have to try.
I mean, you're taking risk. You're betting on yourself. Right?
But you're betting on Apple watches and phones, right? At that point.
Right. Well, you're betting on yourself. You're betting on your ability to execute as a business, to keep growing your business.
Yeah, I mean, look, it's a fair point. I just think a lot of people are wondering about the future. Do you think Buffett, we're going to get his report tomorrow, do you think he sold a decent chunk of Apple?
I don't know. Maybe. I mean, Buffett has this way of moving in and out of the markets with such a high amount of money. It's crazy. Like, when you think about how Buffett is able to kind of deal with like planning something like that, it's insane. Like, how do you move in and out of a position that's like $200 billion? It's fucking insane.
Well, that's probably why Apple needs to do buybacks to cover Buffett's selling, right?
Maybe.
Yeah, I mean, that's usually a thing. Let's get a little bit of coverage on this Berkshire meeting, and then we'll get Steve back and talk more Apple.
My thing is, man, what's going to happen when Buffett actually passes away? Yeah.
Well, I mean, he's getting up there in age, and so I think he's getting ready to pass the business on, though, to the other guys, like Todd.
Yeah.
I think is the guy's name or whatever.
Yeah.
And so some of these final investments he makes, we're going to see what he ends up allocating to.
There's the trade war and the tariffs. There's the transition. There's Apple. And there's this mountain of cash they're sitting on. What's top of mind for you, Mike?
Well, I think how he characterizes that mountain of cash, he tries to downplay it as a market call. We'll see if that does continue. He says, look, the majority of investors' money is in public equities. I'd be interested to hear how he contextualizes the trade war. He's on the record, of course, as believing that tariffs are not really an effective way of rebalancing global trade. Also, things about the federal budget and how that's being approached. You know, he always sort of boasts about Berkshire Hathaway being among the biggest creditors to the federal government, owning 5% of all T-bills, how much he buys in T-bills every Monday. That's a lot of that cash hoard. And he sort of almost is proprietary about thinking what the long-term budget structural reforms might have to look like. But I'm not sure that going through and, you know, eliminating agencies willy-nilly would be the way to do it. And honestly, how he believes this market is behaving. It's really shocking to me in a way that Berkshire Hathaway is making a new high when risk appetites are again on the rise, while it outperformed massively during the correction. So it sort of serves for investors both as offense and defense. It's fairly unique.
This incredible man is 94. A lot of people obviously thinking about the transition. And you point to what you think was a pivotal moment this morning on our network when Sue Decker was on. She's a director and said of that transition that it's gone from a plan to implementation. And you think that's notable, the way that was characterized?
I do. I mean, this is definitely a prolonged and very orderly process. But just the fact that she would essentially say, look, a lot of this stuff has been handed over to Greg Abel in terms of a lot of the day-to-day, a lot of the capital allocation decisions she specifically cited. And I think that's one way of conveying to the tens of thousands of shareholders who are showing up here this weekend that there's not going to be some kind of sudden break in the post-Warren Buffett world of Berkshire Hathaway. It's basically been built to persist as it is. And essentially, while there might be changes to the portfolio or cash allocation or something like that, it's not going to be really a different culture or leadership from day one.
All right. We hope you enjoy your time out there. We, of course, will see you tomorrow. We see
Buffett will be live 8:30 a.m. tomorrow. Kris, a couple more questions here. SMCI, people are asking about. Any thoughts on this one? Is it attractive here at all?
I mean, SMCI, the whole story behind it is, of course, AI spend. So as long as AI spend stays intact, SMCI has a potential to, you know, move in a similar direction. The challenge with SMCI, of course, is that one, it's got competitors, and two, it's a low margin business, right? So, and it's also cyclical. So the challenge is if the cycle starts to close on it, it could theoretically slow down its business, in which case now the thing will go down again. So I think right now there's a lot of optimism around AI. I think one of the reasons why it's been able to recover from the 29s to the 30 somethings right now is primarily because Meta and Microsoft guided. I don't know if Microsoft did, but Meta definitely guided for higher CapEx spend, you know, so they're going to get a piece of that. And so people are like bullish on that. My thing is, you know, whenever I see these trends come up and people are like, oh my God, this is never going to end. Everything is always going to go up and to the right. You kind of have to be a little bit contrarian and look at the other side and be like, can Google afford to do 75 billion in CapEx per year on AI? Or is it eventually going to slow that down? You know, you're already starting to see Microsoft slowing down their CapEx spend. You saw Amazon starting to slow their CapEx spend on AI. And that doesn't mean that they're not going to spend money. It just means that they're going to slow it down. And the thing is, future growth prospects for companies that provide services for that, they end up getting whacked because whatever they're selling is not going to sell as good as it was last year. So expectations usually have to come down. So I think what we're seeing right now is this massive wave of, you know, spending on AI. I think a lot of people are very bullish on it, and I'm bullish on AI long term as well. The only thing is there's got to be a point where it makes sense from a return on investment. Because I mean, if you just keep spending and there's no return, or at least the returns are more milder than you think, then that's a clear way to basically eventually die as a business.
Do you think Japan
would dump our treasuries in any negotiation?
I don't think they would dump it, but I think they do have leverage in saying, look, we're one of your largest creditors. Like, don't fuck with us. You know, Japan has basically been a heavy buyer of US treasuries. So that's helped us keep our interest rates somewhat low, right? So if the Japanese weren't constantly buying our treasuries, then the market, there wouldn't be as big of a market for our treasury, which means yields would climb up a little bit. Right now, and Japan is having a little bit of inflation locally, which means that the central bank has been raising interest rates, which means a lot of that money that's rolling off of treasuries is going into Japanese bonds. Even if they're lower in yield, the indication from the administration right now is that we want a weaker dollar to boost exports. Well, that means that from an FX standpoint, it makes sense to buy currency, quote unquote, and buy bonds in a currency that is going to be going up in value, not down. So here's an example. Like right now, if you bought treasuries and you bought the German Bund is trading at a lower yield than the US Treasury was about let's say 6 months ago. But the German Bund is actually outperformed because the valuation on the currency has flipped, right? So the euro is actually appreciated significantly against the US dollar. So one of the things that I had to explain to my dad like a really long time ago is, in India, you could have got like 9% interest on the rupee at one point. And so my dad was like, why would I buy, treasuries that were yielding 3% when I could go to India and buy these, Indian government bonds that are trading, that are giving me a 6 to 9% yield, depending on, which like maturity you buy. It makes more sense, right? Well, I said, that's true, Dad. But if you think about it, look at the valuation like the value of the rupee versus the US dollar in 10 years. The dollar has doubled, right? So one rupee used to be like $1 used to be 45 rupees. Now it's only now things like 85 rupees. So whatever you thought you were getting in yield got negated by the FX portion of it, right? So the key here is you want to buy a currency that's one giving you a good yield, but then at the same time it's also appreciating. Otherwise, you're really not making that much in real buying power.
Right. All right, that's fair. Steve is back. Steve, we're gonna end the conversation here on Apple. I asked Chris's thoughts already, but what are you opening up, dude? What is this?
I'm hooking something up. Don't worry about it.
Oh, I thought you were opening up your yogurt. That's what people are asking in the chat.
No, yogurt. I'm getting a new shipment on Sunday.
Chris, you know this guy's a dairy dealer?
No. I am not a dairy dealer.
No, I'm saying you have a dairy dealer. Like,
bro, the guy at Kroger is not your dairy dealer. Just be like, oh, I got a dairy dealer. Bro, it's the guy at Kroger, man. Relax. It's not that serious.
No, I legitimately have a dairy dealer.
Dude, Chris, he has a guy he has his phone number. Like, how you get a weed dealer? This guy's he texts him for the.
What does he have? Like a cow in the backyard on Queens or something? Like,
no. So Chris, you know how they have the farmer markets in the city?
Wait, say that again?
You know how they have the farmer markets in the city?
Yeah.
So I was going to the farmer market because there's 4 blocks from my place every Sunday, and getting all the fresh raw milk, the fresh half and half, the fresh yogurt and everything. One Sunday I got there a little late. Like, I was legitimately going there at 7 a.m. to be first online because the line at the dairy truck gets like 50, 60 deep. And then they didn't fucking pack half and half. And I was like, you know what, fuck this. Give me your numbers. I tip them every time I go also. So I'm like, give me your number. I'm texting you my order before. He's like, yeah, no problem. So now on Saturday, I text him my order or what I want, and they have it in a little crate for me. And I just go there whenever I get up. I don't even have to get up early anymore.
For me, one of my eventual goals is to buy something in a very rural part of the country and just live out my days over there. Basically know all my neighbors, Go get eggs locally, like fresh in the morning.
Dude, I get those too. You're from a computer?
Yeah.
Ronnie Brook Farms is the dairy place I go to, and
Man,
then
I'm in Atlanta now. I'm not in New York.
and then the meat place I go to is what's the meat vendor right next to it? Why is the name escaping me?
Steve, is this what your guy looks like?
Hold on.
I have it on the screen. The
guy on the right.
Oh my gosh. All right, so let's get into Apple.
Before you go, do you guys ever okay, so when I was I grew up in India a few years when I was younger. And let me tell you, the fruits that you get like fresh off the trees and then
nothing like the fruit you get in the store.
Dude, it's crazy the amount of so if you live in certain parts of the country that are more rural, bro, if you go to a farmer's market and you taste the difference between actually getting it fresh versus you getting it at the store, bro, it's huge
It's
difference.
night and day. The
Yeah.
apple we get, so we also get the fresh apples from the farmer's market, and I've been getting this type called Wild Twist. Incredible.
All right, so speaking of fruits, that was good, right? Speaking of fruits, let's talk about some Apple, baby. Steve, what was your reaction to that earnings?
Yeah, I wasn't mad at it, I can tell you that much. I think it's a little ridiculous that they had to push back their AI offerings and they're changing up who's heading it up, et cetera, et cetera. They are the king of missed opportunities. How about that?
So, do you agree with me now that the buyback thesis that we debated about
the buyback thesis is amazing.
How do you not agree that the buybacks have been misallocated because there is no growth?
Look at their balance sheet. They can still do this level of buybacks and still invest anything that they need to invest to grow the company. They have just been investing in the company the wrong way.
No. Hold on. That doesn't make sense.
Yes, it does make sense.
They spent $800 billion on buybacks. You just admitted they've been investing in the company in the wrong way, meaning you believe they shouldn't have spent $800 billion.
No. Don't try to twist what I said. Look at their balance sheet. Tell me how much cash they have on the balance sheet.
No. Hold on. Before that, company spends $800 billion in the past decade. You just admitted, correct me if I'm wrong, that they might not have invested in themselves in the right way, aka
it has nothing to do with buybacks. It has everything to do with how they allocated money. They should have never allocated money to the stupid car project. That was a waste of money and time and resources, and they should have been focusing on other things.
Well, no, but here's my argument. Let's say they had spent $600 billion on buybacks over the past
decade.
Wait.
I mean, before that. But Steve, this is the challenge that you run into with any company at that size. If they don't try things, how are they actually going to produce the next big thing? The challenge that you're saying is the car was a waste. Okay, in hindsight, everything's a waste. That doesn't work out. Right?
Here's why. Because they're not a car company. And I get it, that's cliche to say, but they should have stuck in their lane and they should have been first to market or tied lead with a lot of different things and focused on what they're good at. They were never going to manufacture a car. Never. They shouldn't have deployed the resources into it. And if they really wanted to, they had an opportunity to buy Tesla for $40 or $50 billion. They could have easily written a check. It was a missed opportunity. They need to focus on compute.
No, but hold on. That goes to my point. The reason they didn't write a check to Tesla for $40 billion is because Carl Icahn convinced Tim Cook at a dinner to buy back his stock. My broader question is, do you think this guy was so focused on EPS growth via share buybacks that he forgot this company needs to be around in 2050?
I think that they could have accomplished both. And it's easy to say that now. I get that. But I do think they could have accomplished both, and I think they should have redirected resources to making sure anything that Android was doing, they were doing on the same level, if not better. And I think there's a big missed opportunity because they're so far behind on the AI race, and this is Apple. They have a blank check. They should have never been in that position. And now they are. And I don't know if this is how much this is going to hurt them, but they had to do the buybacks because that's how they've consistently grown their EPS. They wasted tens of billions on stupid projects that never materialized.
Okay, so I guess let's talk about the future of the company. This was one of the greenest days we've had this year. Apple somehow down 4%. Should we be worried about Apple now?
I don't think you should be worried, but I think it's gonna trade between 180 and 220 for the next year or two. No matter
Wait,
what
hold
the
on, for
market
the next
does.
year or two?
Yeah, no matter what the market does, I think this goes sideways. I think that this is the first time there's a real chance people may switch to Android over iPhone.
By the way, when Carl Icahn actually said that, you know what Apple's PE was at the time?
I know. I don't know.
10, 12, 13. It was very, very undervalued. So it made a lot of sense to buy back shares at that price.
Yeah, that part to me makes sense. It's just I think they turned that thesis into I think they realized how easy it was to grow EPS by buying back stock. And they became obsessed with, all right, let's just keep growing EPS. And it's worked. They got Buffett to invest 3 years later, right? But how does this sustain a $3.5 trillion market cap over the next decade? Are we Steve, are we really buying iPhone 54?
Look, I know several people that buy the new iPhone no matter what it is. And upgrade cycles happen every 2-3 years for most people. So there's always going to be a market for it. I mean, you just went out and got a new Mac Pro. They have a 2 billion install base, 3 billion install base on units. Services is going to be a 100 billion run rate business this year. They need to focus everything on AI. They have to. They're so far behind. I don't know what they do, but I do think this is trending sideways no matter what the market does.
All right. Well, let's do this. Let's do like 10 more minutes and then we'll end it out. We got lucky enough to have Kris and Steve on at the same time. Any questions in the chat for either one of them?
Can we talk about Meta? Can we talk about Zuck?
Okay, but real quick, we'll talk about Zucks, but put some questions. I'll do some rapid fire, so they're not going to spend a ton of time on the questions, but we'll get their raw thoughts to them.
We talk about Meta being probably the most undervalued company in the Mag 7 right now.
Okay, so you're buying more Meta.
No, I didn't say I was buying more Meta, but I think it's the most under. Did you see the EPS revision for this year? It's insane.
Kris, would you think of Meta right here or no?
Yeah, I mean, Meta's got a lot of things going right for it. I mean, they've got a ton of cash flow that they can move around, and Zuck is a good operator. He knows how to, he knows how to run a business. So I wouldn't worry about Meta.
Zuck going on Theo Vaughn is something Sundar, doesn't really do. It's different, right?
Oh, he's getting a fresh makeover. This is part of his rehabilitation stint. But when you think about his MO right now, he's had a decade of paying Apple and Alphabet royalties that he absolutely despises. He truly believes AR/VR is the future, and he truly believes glasses are going to be the next wave of compute. And I happen to be in that camp. He's going to own it from the hardware to the software and not have to pay a VIG to anybody. And at this rate, nobody's going to be able to catch him. And don't forget, he has 3.5 to 4 billion people using his products. So this could make Meta over the next 5 years 3 or 4x if things work out, maybe 7 years. But there's huge tailwinds at its back right now.
Yeah, and there's some, I don't know 100% true if it comes out, but I think they really are going to try to make a play for data center, for doing what is that thing called? Cloud compute, where they basically have generative AI on the cloud and basically selling generative AI services and basically generating that huge high margin revenue from that. So this way they could be that fourth leg in the race. So you've got Azure, Amazon with AWS, GCP with Google, and theoretically with whatever Meta ends up releasing. I mean, you look at the amount of money that they're spending on research for their models for Llama, and they're like, hey, why can't we just use this and monetize this in the future? So, Google's really good, Amazon's really good, and so is Microsoft. But another player in the cloud space could theoretically happen. I mean, there are other players out there too, like Oracle and IBM. They're not going anywhere. It's just they're like Oracle. By the way, Oracle is trying to make a really big play for AI.
Oracle's making a huge push.
So, that could end up being another leg there as well. So,
Okay, some questions from the chat. I really don't want to spend a lot of time on this one because I've talked about it enough today, but I mean, you guys are probably seeing my back and forth. SoFi, Hood, Kris, any quick thoughts on the comparisons people are doing between these two?
Hood is good. SoFi, to me, is just another bank. I'm sorry. Like, it'll grow like a bank. I don't think that there's really that much differentiation that I see in SoFi. On the other hand, when it comes to Robinhood, I think there's maybe 3 or 4 catalysts on the horizon for Hood. Like, the first thing is just their ability to buy back shares. Like, people really underestimate how value accretive that is. So one is the share buyback program that they're accelerating because they're just generating so much money in cash flow, right? So that's number one. And the thing is, the amount of people that they have that are actively paying for like Robinhood Gold, the amount of user engagement that they have is insane. Then they've got, now they're layering on credit services like credit cards and all that stuff, which is another revenue driver. I'm sure once banking comes on, that'll be another driver for them. So I personally, when the banking product comes on, I'm going to switch to it, from my TD account. Like, I have TD, I've had it for like 20 years, but if I can get everything in one ecosystem, I'd be pretty set, So that's what I'm going to do. Then they've got international expansion goals, which I think they're actually going to be able to do really well, because the thing is, maybe a lot of things are not transferable, but UI, which, believe it or not, in my opinion, is a moat, is going to be a big thing. So if they're able to use the same clean UI that they have here, translate it to the other markets around the world, they could theoretically end up getting a lot of traction, and that just brings a lot more revenue their way in the future, right? Because remember, their entire business model is just picking pennies off of transactions, and as far as I can tell, there's no stopping that. Like, there's no one's like, oh yeah, you know what, I don't like the stock market, I'm not trading anymore. Not more and more people are in the market. Like, it's funny, I did an exercise with my friends at our cabin trip. I said, can I just see your phones? And every single person had the Robinhood app.
I just asked everyone for their year-to-date percentages on Twitter. Like 90% of the screenshots are Robinhood year-to-date screenshots.
I mean, you do have a lot of followers that are Robinhood people, so but I do think that the older, like, legacy players, they're the younger people that are coming in, that are inheriting money, that are basically coming in, they don't like seeing like the Fidelity app or the Charles Schwab app. They're like, no, I'm used to Robinhood, I like that, so I'm going to go with that. And so as they become wealthier, because of course, naturally over time, they've got stocks, they've got bonds, whatever. They actually, not bonds, but they have stocks that goes up. You're going to see the assets under custody get higher, and higher, right? And if they're able to pick off transacting from that, or doing other parts, other things to it, it'll just keep generating them more and more business going forward. So,
Steve, your quick take on this Hood SoFi debate stuff?
Yeah, I think it's pretty ridiculous. Assets under custody is the same thing as deposits. In fact, they're probably.
Oh, hold on. You agree with me that we are allowed to compare deposits because assets.
Yeah, if I deposit money into a brokerage account, that gets classified as assets under custody, or I deposit money as a deposit in a checking or savings account, I'm still depositing the same amount of money.
Hold on. So I just want to make clear, because the debate I've been having with SoFi bulls,
it's not a debate. It's real. It's reality.
The pushback I've been getting, that Grok and all these people have been saying Amit got cooked on, is that I'm saying let's look at net deposits, Hood versus SoFi. The SoFi people are saying, wait a second, Amit, a brokerage is different from your checkings account, therefore net deposits are two different categories.
So, okay, it's a different type of an account, but if you're going to put 10 grand into a checking or 10 grand into a brokerage, you're still putting 10 grand somewhere.
Really?
I mean, 10,000 is 10,000.
What do you know? That some people put 10,000 into Robinhood, which basically functions as their checking account, and that ends up being the same 10,000 that could go to
It's a ridiculous thing, and I'm actually planning on going on tonight and talking about it, because look, the bottom line is brokerage accounts are more sticky. Not many people pull money out of a brokerage account to make purchases because you're investing for the long term. But people pull money out of a savings or checking account all the time.
All the time.
All the time. So to think that it's not as sticky is crazy. I cannot tell you the last time I moved money out of a brokerage account, but I can tell you that I moved money out of a checking account today.
And if that money goes to your Schwab brokerage account, the opportunity cost is it's not going to the one-stop shop, which is the SoFi account.
Well, and here's the other thing that people need to remember. When money gets posted into Robinhood, they're doing it because of the bonus in many cases.
Yeah.
That is now 5 years that money is not going anywhere else in order for them to get that 2 to 3% bonus, depending on how much money they deposit. And that is money that's not going to JP Morgan, not going to Bank of America, not going to SoFi. And if that 18 billion in assets under custody stays 18 billion assets under custody for 5 years, it's 18 billion in custody. Like, I don't understand what these people don't understand. A dollar equals a dollar. It's the same thing when people tell me you can't compare Palantir to another company because they're in different industries. It doesn't matter if you sell widgets or you sell software. A dollar of revenue is a dollar of revenue, and a 10% growth rate is a 10% growth rate. It's just numbers.
Well,
it's just
I'm convinced they do understand that these are the same, but they are
I'm convinced they do not understand.
Well, they're trying to come up with these semantic, nuanced ways to differentiate between a dollar versus a dollar, and I'm left here, looking like the guy who's like making this intellectual argument. I'm like, it's a deposit.
I don't own any shares of Robinhood. Like, it does not benefit me at all to take this side, but it's logic. And the logic is, if you're depositing X amount of money in a brokerage account, let's just say X amount of money is 10 grand, or you're going to put it in as checking account because it's yielding 3.5%, 4%, you're still putting 10 grand somewhere.
I don't see the argument, and it's like
there's no argument. There's nothing to see. There's no argument.
DDI, who basically made this argument, got 200 likes and like 50 comments saying Mick got cut, and I'm just reading all these comments like, am I a fucking idiot, or do all these people, are they in a cult and this is their leader and they don't understand?
SoFi is becoming a cult. It's a bank. It is a bank. Until they generate, and this is just my own opinion, until they generate at least a third of their revenue from tech, they're not a tech company. Sorry. Not happening. Lending is not a tech feature. Lending is a traditional banking feature. And that is why the street is not giving them the multiple that everybody wants, because they're not a tech company right now. Do they own Galileo? Do they own Technesis? Yes. Did they merge the products? Yes. But that doesn't necessarily make them a tech company, because technology is not producing the lion's share of their revenue or profitability.
And again, you don't own this. You don't own the hood. You don't care.
I don't own hood. I own a lot of SoFi. I don't own any hood. Not a single share.
Okay, last couple questions. VG. These guys are spamming VG in the chat. I don't know what you two and Matt have done to get people to love this stock. What is going on with this? Why should we care about this?
People should look at the investor deck.
Okay, Kris, why should people care about VG?
Well,
I don't know if Kris actually wants to say.
Yeah, I'd probably just. I mean, I could give you a quick thesis on it.
Do you still like it? You like VG? You're long? Like, what do you?
No, I'm long VG, man, long term.
Give me a ChatGPT 3-year-old thesis. Like, why should people care about this?
Venture Global is going to be in a very few years the largest liquefied natural gas exporter in the United States. Okay. They've got two major projects, Calcasieu Pass, and now they have another one called Plaquemines. They have another one that's in construction right now. That's huge. That's literally like it was all over. Under the Biden administration, there were some restrictions that were placed under like construction of these LNG terminals. Under the Trump administration, everything's been cleared from a regulatory standpoint, and these guys are going to be printing a lot of cash flow. So a lot of people will focus on the debt and be like, oh my God, look at the debt. They've got 26 billion in net debt. Yeah, but against what EBITDA that they're going to generate. And then on top of it, the contracts that they sign, they're typically like long dated 20-year take or pay contracts, which basically means that when not, let's say there's fluctuation in natural gas prices, they're not going to be impacted nearly as much. They have a little bit more impact than the other guy, which is Cheniere, because they have more cargoes that are going to be in spot, but eventually they're going to contract all that out. So there's been a robust market for off takers signing up for long-term supply contracts, and natural gas is a bridge fuel that everyone needs to get to energy transition. So if you look at what's going on in Spain and Portugal, they went complete renewable, and now they're having blackout issues and stuff. So as countries industrialize, they need more energy. Now, nuclear is of course a viable option, right? But the cost of nuclear is astronomical depending on where you are, and there's of course pushback by like environmental groups and whatever. So what's the alternative? Well, the other alternative is going solar and wind, but solar and wind have their own shortcomings that are very hard to come across. So you need a good baseload energy source, and traditionally it's been coal, but coal is like super pollutant, so you don't want to use coal. I mean, sometimes like the Trump administration will be like, "Oh, clean coal." I'm like, okay, but natural gas is probably one of the cleanest ways that you can produce that base load, and do it in a very quick way, so that this way you can maintain grids. So as countries industrialize more and more, they're going to be utilizing more and more natural gas. So the demand for natural gas should keep up, relative to other fuel sources.
Could VG go to like $3, $5? Could it get there?
I don't think so. Only because they just have too much in assets. At that point, I mean, dude, you've already had insiders buying back shares at like $10. So there's definitely some valuation gaps. I mean, the risk, there's a few risks that you would get with Venture Global. Okay, number one, the biggest risk that they have is Europeans not learning their lessons from the Ukraine-Russia war and basically saying, you know what, let's build more pipelines to Russia and just keep buying more Russian gas. Like, that's like mistake number. If they do that, the price of natural gas comes down, their margins will compress, and then you got a problem, right? So that's like one major problem that they would run into, which is European gas demand would go down. The Europeans right now pay between 10 and 12%, depending on spot prices of natural gas. It costs these guys $3 in Henry Hub to get the gas from local producers in the region, and then another like $2 for liquefaction for their original plant, and then the future plants are probably going to have closer to like $3, like between $2.50 and $3 liquefaction per MMBTU. And so it's very complicated. Like me and Matt, we've broken it down a couple of times, but one of the key differentiators with Venture Global is that they are going to be generating a ton of cash flow. That cash flow is going to be recycled into future production, and that future production is going to generate even more cash flow. And the thing is that cash flow is going to be pretty durable going into the future. So right now you're getting to buy a company. It's got a $20 billion market cap, but right now it's going to probably generate like 7 to 7.2 billion in EBITDA this year. And if you know this business, this is a lot of, that's a pretty low multiple from an EBITDA to market cap value. And if you look at on the enterprise value is like 46 billion. So so if you take Cheniere and you use their numbers for enterprise value to EBITDA, you've got probably this thing undervalued to about like $15, I think right now is the target. $15 to $17.
Double you think that's available?
Yeah, in a very short period of time. All you just need is clarity on EBITDA going forward, and then of course next year is a whole different thing. They've got some things that they can work on with their debt going forward. That's value.
How much debt do they have right now?
Net, like total debt is 29 billion. Net debt is about 26 because they've got about 3 billion in cash. And like I said, they're generating per year, they're generating about 7 billion in EBITDA. It's very hard to understand their capital structure because, like, if you look at their interest rate is about 500 million a year in interest charges, but that's because most of their interest is being capitalized. Like, it's actually being recycled into the total project cost. Do you know how that works? I'm sure Steve, you know, right?
I didn't hear the last part you said. Are you talking about
like capitalized interest?
You mean the accrual with depreciation of assets?
No. So right now, imagine right now you bought a piece of land, right? And you're going to build a house. Let's say it's going to be worth $500,000. Well, the thing is, when you spend the money, you're taking that 500,000 and you're spending that money. But if it takes, let's say, 2 years to make, right?
You could amortize it.
Yeah, that's what I'm saying. You would layer on those interest charges for those 2 years into the cost of the actual project itself. So if you think about it, if you build a $500,000 house and you're paying a 10%, interest on that 500,000, that means that you're paying 5,000 plus 5,000. So it ends up costing you not 500,000, but it costs you 550,000 to build that house. Well, 510,000 to build that house, right? Imagine that with almost, I think right now the value of this thing is what, 20 billion, 28 billion, which is the rough cost of the newer CP2 project. So there's a lot of capitalized interest that goes into these things. So it's literally just, if you do the math over the long period of time, you can see what it is. And then on top of it, like they're vertically integrating. So they're trying to become a major player in the future. So if you look at the trajectory of these guys, it's going to be very similar to Cheniere. Look at LNG, that stock called LNG.
Steve, your overall thoughts on VG? You concur with everything Kris says?
Well, yeah. I mean, I've been talking about exporting capabilities for years now, and we're now seeing a real competitor to Cheniere. And before, Enbridge had made a massive investment in Louisiana. Energy Transfer was making investments in 2 of their export facilities and then redoing Lake Charles. Enterprise Products, Kinder Morgan, they all have, to a degree, some type of export capability, and they're working on expanding. Venture Global is the only one right now that will be a real threat to Cheniere. And I don't even know if threat is the right terminology, because the EIA continuously is saying that liquid fuels will see increased levels of consumption and production through 2050. And I think that shift's going to be even greater now, because it turns out, lo and behold, wind and solar may not be as effective as what everybody originally was saying over the past couple of years. And when you look at the deals that are probably going to get done, probably going to include buying natural gas from the US. The best way to transport that across seas is liquefaction. And there's only a couple of companies that do that. And it is going to be a very profitable venture for Cheniere, Venture Global, et cetera, because even if they have to buy it at the Henry Hub spot price, it's probably going to cost them between $1 and $2 to liquefy. They're selling it for a lot more to Japan and everywhere else. So
Japan, China, India, South Korea, and the other thing is the other sources are actually starting to not be as economical. Like a good example is Japan buys a lot of their natural gas from Australia, but Australia's lifting costs have gone so much that actually the governments in that area are kind of like, hey, listen, maybe we shouldn't be exporting as much natural gas because it's starting to impact our own local domestic supply. So the profitability for Australia is not there. So the Japanese are going to have to replace that eventually somewhere. Same thing with electrification. If you think about electric cars, you're just moving from petroleum to electricity. And where do you think that electricity is coming from? It's not coming from just solar. It's going to come from other sources as well. So the future demand for LNG is going to be big. I think India is supposed to grow their LNG demand by almost like 60% in the next 5 years. And they're a pretty large user of that. So they're in a good place. It's the biggest challenge I think a lot of people have with With Venture Global, it's just that debt. They look at the debt and they're like, oh my God, that's a lot of debt. Like, I don't want to be in a company that's half their market cap is debt, you know? But the thing is, if you know anything about debt, it's not about the debt. It's about figuring out how to leverage that debt into future growth prospects, right? So yes, there's a lot of upfront capital that has to be deployed in order to construct these things, but for the next 20 to 50 years, these things are just going to be printing cash. And that cash that's going to be printing is going to go towards other parts of the business, likely dividends and share buyback. So pull up LNG again, Amit, on your screen. Okay, go to like a 5-year chart or a 10-year, whatever, a max chart. Right? This is Cheniere stock going in the 2020s to now. Do a max chart. Okay, you see that in 2012, how they pivoted? They went from literally like $40, $50 to $235. Okay, but that's not all. Go type in Cheniere and type in dividends. Look at the juicy dividends that these guys have been paying for the last.
Let me pull this up.
Look at that. Constantly paying
43 cents. Yeah.
Right? 43 cents constantly every quarter right now. And the thing is that dividend is growing every single year. As more and more facilities come online, more and more their cash flows come online, they're doing a combination of share buybacks and dividends. So in terms of a shareholder, your total return is freaking insane. I mean, you got a 5x from COVID lows.
You know, Cheniere sounds like a handbag.
Like Chanel?
Does that not sound like a handbag? As soon as you guys said that, I was like, this is a handbag company? What are you talking about? But yeah, that makes sense. It's a fair point. Would you think there's the day-to-day analysis on VG matters? Because a lot of people say it in the chat every day. And my response is, from my understanding, Kris, you and Matt believe you buy it and you don't look at it. It's like a decade type of thing, right?
Yeah. Yeah. I mean, there's definitely going to be volatility early on. A combination of a few things. Like, once again, like the war in Russia could be like a move up and down. You've got spot prices and LNG differences that could also widen and narrow. So like right now, the cost of liquefied natural gas in Europe is about $10, $11. And for us, it's about $3. So the spread between the two is about $8, right? So with an $8 spread, that's how much profit margin you're going to be able to generate. But let's say tomorrow the Europeans, they own the spot price drops to like $5. Now all of a sudden the spot here for them is only $3 and they're selling at $5, which doesn't make sense economically, which means they're not going to do very well. Now the thing is, their exposure to spot, it's what's going to ultimately determine what the future cash flows are going to look like. So like Cheniere, they don't do a lot of spot pricing. What they do is a lot of fixed contracts. So they have a fixed contract. This is the fee. You either take it or leave it. And so that's why you have a nice up and to the right kind of business model. Cheniere is good like that, but Venture is like, we're going to keep more of our production on spot, because there are times where natural gas prices, when they spike, your profitability spikes along with it. And you can actually use that spike to generate more cash that you can use to pay down debt and do other things with it. So I think Venture Global is taking a little bit more risk than Cheniere is. Cheniere is a nice, clean, up and to the right kind of business. Venture is like, look, we're going to have periods where things are going to be anemic, and then there's going to be periods where things are absolutely insane. So, if you're trying to trade it, then I don't know what to tell you. But in terms for me, when I look at this company, I'm like, it's got a lot of potential in the future. So.
Yeah.
Cheniere is not a company. I'm sorry, Cheniere or Venture Global is not a company you try to trade. There's not a lot of volume. It's not a tech company. It's an energy company. This is a value play, and it can grow substantially, especially when you look at how much energy the world is going to need over the next couple of years with all the new data centers coming online.
All right, last 5 minutes, then we got to end it out. I'm going to give you guys both a random ticker. Give me your 30-second take. If you even have a take. If you don't, that's fine. And then we'll end it out here. PayPal, Kris, thoughts on this?
they're following the AutoZone playbook, just buying back shares every chance they get. That's it. And I mean, their business is stable, so they're still generating a significant amount of cash flow. The thing is, in order for this to play out, you're not going to see it now. You're going to see it probably 5 years from now. So, you have to look at this in terms of like total ROI for those share buybacks. So if they're constantly buying back shares when the valuation is low, it's going to be value accretive to shareholders. In terms of stock price, I'm not so sure the business is really in like huge growth mode. So,
Steve, your quick take, PayPal.
They should listen to me. Take $3 billion and put a 4.2% dividend on the table. Take the other $3 billion of their capital allocation plan. Keep doing buybacks. They've been buying back so many shares. The market doesn't care. At this rate, they'll buy every last share back within 11 years. They need to shift to a dividend program, put cash in the pockets of shareholders, and watch how many new shareholders come in when you have a company with this type of balance sheet, this type of profitability, and at a 4.2% yield, it'll be one of the largest dividend paying stocks in tech by yield. And it'll enter into so many different ETFs, and you'll just get a different breed of investors wanting to buy it. I don't know what else they can do to get people excited. People just have abandoned this stock. It's gone nowhere, even though it's still growing its top and bottom line. So I think they need to shift to a dividend sector now.
Okay. Do any of you care about HIMS at all?
No.
No. Okay. Archer. Any of you guys care about that one?
No.
Okay. Kris, thoughts on Disney? Any updated thoughts on that one?
yeah, I think Disney long term is actually going to do very well. But they really have to be better about their lineup when it comes to their movies and the theatrical releases and stuff. I mean, they really need to get what's his name, Lasseter. I think his name is John Lasseter. He worked on a lot of like. They really went very. I don't want to call it woke. They were trying to be a little bit too inclusive, and they really screwed up because they alienated a large part of their demographic base. And then you've got, of course, competitors that are chomping at the bit for them. But they're also their business is transitioning from linear to streaming, and they're making progress on that. So they are generating more and more money from that. They've also got parks business and a cruise business, which is just one of the most enviable things that in terms of cash flow that you can have. So Disney is in the process of transition. I think they do need to work on their IP a little bit to be a little bit more. I don't know, like they just really need better IP. Believe it or not, tonight I'm actually going with the wife to go see Thunderbolts. So I hear it's good. It's actually one of the better movies.
What's that about? Thunderbolts?
Yeah, it's a side quest from like the Marvel Avengers series.
They're trying to stretch the Avenger stuff as much as they can.
I mean, they can stretch that thing at least another couple of decades, man. But right now, the scores on this are really good, so I really want to go see it.
Steve, thoughts on Disney?
I don't know. I think I have a little bit of a different take on Disney. I think they have assets that can't be replaced. A lot of people love companies that are irreplaceable. I mean, look, you can't replicate Energy Transfer's infrastructure, same way you really can't replicate Disney's parks. But at the same time, I don't think that their content is exciting. I don't think that their networks that they own is exciting. And I think that they're going to face even more pressure in an age of AGI when people are able to create their own content about whatever they want. Now, I think Netflix is in a great position because I think Netflix will eventually have some type of service where, and this could be 5 or 10 years off, where you tell what you want to see. It's just going to make content for you based on what your preferences are. Now, it could be a benefit to Disney because it may make the cost of production so minimal that they'll be able to pump out more content a lot quicker, and they may be able to reduce expenses. But at the same time, I don't think people really care about the Disney line of stuff that much anymore, considering this isn't back in the 50s or even, I would say, the 80s, where there was limited content on TV, and Disney was one of the only types of cartoons, except for Nickelodeon. You are in an age where Netflix has a whole genre toward kids. You have YouTube Kids. I think there's a lot of competition, and from a media play, I think most of their entire brand is Marvel and Star Wars at this point. I don't know. It's kind of like Nike. I don't know.
Okay, last couple of tickers. I'm just gonna throw it out. If anyone wants to say anything, go ahead. If not, then no worries. Tesla.
Scary.
Google.
Undervalued.
Shopify. Okay, no one has any thoughts on Shopify. I actually like them. They have
I need to look at them again. It's very interesting.
Nvidia.
Undervalued.
Oracle.
Undervalued.
Oh, Steve, did you actually buy Elf after we talked about it?
No.
That one was up 12% today.
Was it?
Yeah, dude. I don't know if it finished up 12, but it was up.
Damn it.
Wait, Steve, were you trolling me when you said you've never heard of Elf the movie?
No, I've never heard of Elf the movie.
Okay, hold on. All right. So is that not crazy, guys? This guy gets on me for not knowing movies. Elf? He didn't know what Elf was.
Dude, you've never watched The Godfather. Do not put us in the same category.
How did you not know what with Will Ferrell, Elf? Like
Do you think I look like somebody who's going to watch a movie called Elf?
No, but I think you know about the company. That's like or the
Why?
company.
I don't even know what songs are on the radio. Why would I know what Elf is?
I'm just saying, bro. That's wild. Like, how did I know that movie, but you didn't? Rocket Lab.
I mean, I've been wrong on it. I hope it keeps going up from that.
Okay, and last one is Adobe.
Drastically undervalued.
Kris, any thoughts on Adobe at all?
They really need to work on customer satisfaction. I mean, they really screwed up big time. They thought they were the big deal, and a lot of people are like, the way that they were treated by Adobe has been pretty poor, and because of that, a lot of people have switched away from Adobe. So I'd say, I don't know, the consumer is at the end of the day the biggest asset that you have. So if you lose confidence in the consumer, then your business is eventually going to slowly make its way into irrelevance. So I don't know.
Steve, you just like the numbers, I imagine.
I think the numbers are
look
fantastic.
good. Yeah, the numbers look good, but the thing is, like, sentiment around its actual core product seems to be like falling off a cliff. So that's just me looking anecdotally. I've never really been interested in Adobe like that, so I can't say 100%. So
yeah, I just know that I can't get rid of Adobe licenses, and I think it's a sticky product, even if there's customer service challenges for some people. The bigger thing for me is how much of a margin expansion can they get in an age where they have AI doing coding for them or partial coding for them? Yeah. And how much better can their products get? And is Canva a real threat? I mean, we use both Canva and Adobe. So one did not replace the other. I don't know.
I think PDFs are here to stay, but their Photoshop product, that's going to be a bit of a challenge.
Yeah.
Right, but they have the whole Premiere Suite, which is so many different things.
Yeah.
All right, there we go. We will end it out there. Thank you, Steve and Kris. Both their Twitters right there in the chat. You can check out Steve's articles on Seeking Alpha from his Twitter. Appreciate you both joining. I'll be live again for Pouncer Weekly at 11 p.m. tonight with Matt, Arnie, and Amir. We'll do some.
You know which one you never ask about, but is actually probably one of the best performers ever?
What?
Duo fucking Lingo.
It's a hell of a company.
When we mentioned this,
Duolingo.
When we mentioned this, like, what, 2 years ago? Remember, everyone's like, what? All the naysayers now.
We should have bought it, dude. We should have bought it. Like,
all the naysayers can suck it,
Steve,
shout out to Sam Mercier who brought Duolingo to me. I should have bought.
Is this the one you were talking about, the language one?
Yes.
Okay. Yes. Yeah, I mean, that language stuff's always hot.
Yeah.
But they're growing like 60% year. Like, their growth is incredible. So
nice.
It's pretty amazing. All right, we're going to end it out. I'll be live on Pound Trade Weekly, 11 p.m. Eastern. Thank you, everybody, for being here. 9th day in a row of green in the S&P. Been a nice market rebound from the April lows, and now we'll see what happens with trade deals and negotiations and what ends up happening to the market over the next couple months, and obviously over the next coming earnings cycle, because we still have NVIDIA left and a bunch of other companies to look forward to next week. All right. Thank you, everybody. We'll see you guys. And if I don't see everybody on Pound Trade Weekly today, then Sunday Future Show. We'll be back and we'll go from there. Bye, everyone. Have a good one.
Later.
Later.